This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I don't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Another week. Last week was a news-lengthened work week, and over the weekend, Paul, the news just kept coming and coming.
Yep.
A real mystery here, but I would say all in all, the tape elevates this morning.
The tape elevates this morning, Tom. We got the S&P up 0.4%, the NASDAQ up 0.5%. Bitcoin, I didn't pay attention over the weekend. I mean, we're back to 92, 93,000
the president stepped
on Bitcoin.
in with that announcement.
Exactly right. And there you go. So we'll check in with Matt Miller later in the day.
80 to 90. Do you have Matt Miller with you later in the morning?
We're talking to his people, Tom.
You got ISM at 10 o'clock to get the data started here in a week
Alex
with the
will be with us. Yep.
jobs report. As well, gold up $37, 28.85, and we're not going to go through all the data right now. We'll give it to you over the next number of minutes. But all in all, whatever your views on politics, you bring it over to equities, bonds, currencies, commodities, and there's a constructive tape this morning is how I'd put it. A BitDog, $93,000, futures up 25, and the VIX inside 20, 19.59. We got great guests, Troy Gayeski to be with us. Perfect guest.
And how about in studio, Kathy Jones, Tom, you're right. Kathy Jones, Chief Fixed Income Strategist at Charles Schwab. What do you do with the bond market here, Tom?
Stephen Roach of Yale University.
I've heard of him.
Cameron. Peter Trubowitz. I said, can you get me Trubowitz, please, of LBJ and now at LSE in London. And Professor Trubowitz will join us on the news of the transatlantic politics, to say the least. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
All right, and we got futures advancing. This is ahead of long-promised tariffs scheduled to take effect tomorrow. We'll start with NASDAQ futures up 0.6%, 129 points. S&P futures up 0.4%, 27 points. Dow futures up 0.3%, or 136 points. The two-year yield, 4.02%. That's up 3 basis points. The yield on the 10-year, 4.25%, and that's up 4 basis points. European defense stocks rallying. European leaders pushing for increased military spending. So, for example, BAE Systems up 13% in London. Rheinmetall up about 7% in Germany. We go to the Bloomberg Dollar Spot Index, down about 0.3%. I have to point out the euro up 0.8% at 104.59 against the dollar. We have Bitcoin trimming back its Sunday rally that was sparked by President Trump's comments on strategic crypto reserve. So cryptocurrency exposed stocks are rallying. We have Coinbase up 9%, MicroStrategy up 12%. Tesla leading the Mag 7 stocks before the bell. It's up more than 2%, and this is after recording its biggest monthly decline in about 2 years. And this headline just coming across the terminal, Kroger CEO Rodney McMullen resigns after personal conduct probe. So we'll have more on that. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Appreciate that this morning. Again, in the equity space here, let me give it out to you on a percentage basis of what I'm going to call normal lift. SPX up 0.5%, Dow up less, up 0.3%. NASDAQ leads up 0.7%. And the small caps, Russell up 0.9%. Lori Calvasina with us later this morning. We start strong with Troy Gayeski at FS Investments with a very nice holistic view of the equity markets. Troy, how do you dovetail the political maelstrom with maintain control, lose the fear, move forward? How'd you do that this weekend?
Yeah, great question, Tom. First of all, I'm sad we can't see that Givenchy suit you spoke about in the on the intro. But
see, the difference is Gayeski's like, it's Givenchy or whatever. It's Givenchy to me. Okay, I didn't think Lisa, did the bright yellow work?
It did, because it stood out. I mean, he was like the thing on the red carpet.
He was the thing.
Yes,
Lisa says it's good.
Troy Gayeski used to be that way too. Yeah. Troy, what do we do in the market out 6 months, 1 year, 3 years, given this political maelstrom?
Yeah, no, great question. I mean, I think in times of uncertainty like we have now, and like you highlighted before, obviously uncertainty is elevated. There's a lot of cross currents in terms of the potential for cuts in government spending against more productivity enhancements. clearly the tariffs, the first order effect of the tariffs you already alluded to, where you have all this front running of inventory being pulled into the U.S., which has led to the Atlanta Fed GDP report being negative for really the first time since the pandemic. And so in times of uncertainty, we always like to go back to basics and just look at the contributions to GDP, where they've been and where we expect them to go. So I'll highlight three for the viewers. If you start with the most important one, which is consumption, of course, even though the consumer is in a weaker state than they were, 2 years ago, and there's now debate over how much of the excess savings has actually been run down. You had that Moody's report, which you guys ran with, as did the Journal, versus what the Fed's reporting. The consumer is still in exceptional shape. For instance, debt to disposable income, not debt to assets, which have been inflated, of course, by markets in the housing market, are a full 6% below where they were Q4 of 19. Then you look at financial obligation ratios or debt service costs, they're meaningfully lower as well, not skewed by the pandemic, but in much better shape. So if we can create 1 million to 2 million jobs this year and disposable personal income still climbing by 1% to 2%, there's no reason to expect the material fall off in consumption. Then if you look at business fixed investment, this is very critical, Tom. The hyperscalers plus Apple alone are going to contribute 50 to 55 basis points of GDP growth this year. These are numbers like we've never seen. Now, that assumes it's all spent, which is somewhat in question. And then lastly, regardless of what happens in the federal government, states and municipalities are for the most part in very good shape. So you step back and say, yes, growth will more than likely be lower, but it has to be lower in order for inflation to ever recede to 2.5% from where it's been, the past 3 years.
And this gets, Paul, to the idea of where's nominal GDP, which folds right back into business investment
that's right.
in corporations. And Paul, all of a sudden, I'm starting to frame, could we have a sub 4% nominal?
No.
That would be the downside.
That'll get your attention there. So, Troy, how do you think this Federal Reserve is going to move through 2025 here, given that economic backdrop?
Yeah, very conservatively, very slow. Our base case this year has been 25 to 50 basis points of cuts. We still think they're on pace to do that. Obviously, they're frozen for the time being to see which tariffs go in effect, what that impact is on inflation, what the growth picture looks like. But as you know, the labor market is gradually weakening. So bringing the front end, somewhere between 3.75 and 4 makes a lot of sense. We should re-steepen up the yield curve. We've had this mini reinversion of the yield curve recently. As soon as there's indication that the Fed is going to move, you'll see that yield curve steepen up dramatically. And then you talked about equities before. I mean, look, nothing's really changed that dramatically other than the uncertainty. We still expect, earnings growth to be relatively strong. However, it's unlikely we get more multiple expansion, and we could get some degree of multiple compression driven by higher yields and or a lack of large
we got time for one more question, Troy. If we get a dampened nominal GDP, does that take us away from double-digit earnings growth, including the 13% statistic of the fourth quarter?
Yeah. So look, we always remind people nominal GDP drives revenue growth, right? And if you look at the world,
that's what MIT chemical engineering gets for you. He used to sneak into Robert Solo's class. I could do straight
line analogies.
Okay.
But that's been so critical, right? Is people wrapping their brain around the fact that it's nominal GDP that drives revenue growth, not real GDP. And so corporations have obviously enjoyed this tremendous period of above average revenue growth. Our biggest concern for earnings this year is less about individual or where the nominal GDP number comes out. It's whether sectors other than mega cap tech can really drive, 12, 13, 14%. That's still very much in question. So we'd expect earnings to be slightly lower, both from nominal GDP and individual sectors that have a little less strength than are projected.
Yeah. Troy, we keep you on longer, but Kathy Jones watched the entire Oscars, so we got to go to her. Troy Gayeski, thank you so greatly appreciate it with FS Investments this morning. He's not wearing Givenchy today. Futures up 32, Dow futures up 170, the VIX 19.46. Kathy Jones is with Schwab, writes brilliant notes about how to capture yield and total return forward. It was with Charles Schwab. Have you adjusted the ability to capture total return in fixed income with the festivities of the last 14 days?
Well, I'm not sure I'd call it festivities, but the level of uncertainty is so high that all we can do is take a cautious approach. So our total return still looks positive for the year. It still looks pretty good because we have enough coupon income to provide some cushion. But the outlook in terms of where rates are going looks really as uncertain as I can remember in decades. Our base case is that we bounce around here for a while as the market tries to sort out the various things that are happening in Washington, what the policies will give us. But a little concerned that we have this combination of potential inflation and potential growth slowdown. And that leaves certainly the intermediate to long end of the curve in a trading range.
I mean, I'm looking at the INGO function on the Bloomberg terminal, the Bloomberg Index browser. Well, the best performance.
It's huge.
I know. Thank you, Lisa Bromwitz. The best performance in the fixed income space has been United States mortgage-backed securities. Talk to us about that market.
Yeah.
That seems riskier to me.
Yeah. Well,
I
think there's a bet going on that we're going to see some. First of all, you have constrained supply, and then you have a pretty good income stream. And I think that the duration has expanded to about as far as it's going to expand.
Okay.
And there's a bit of a play here that's taking place.
In the not the madness, I'm editorializing, in the absolute cacophony of news that we've got, how do you advise Schwab clients to select duration? CD, do you do a 2-year or a 5-year? Paul Sweeney's mortgage back because he's a yield hog. Is Paul buying a 20-year Ginnie Mae? I mean, what do you do with the choice of duration? She's going to tell me she barbells because that's what Liz Ann Saunders would say. What's the choice of duration given the maelstrom we're in?
Yeah, we have been since last fall at benchmark or below, and we use the AG for the benchmark.
The Bloomberg AG.
The Bloomberg AG, right, for benchmark. It's around 6 years. You get it's all investment grade, you get a decent yield, and we suggest staying there or lower, but you could barbell it or you could ladder it. And then you have some longer duration in case rates do fall.
Right.
But your average duration is in that middle.
Have you seen bond flows increase because of equity uncertainty?
Yes, we have. We've had some pretty steady.
Well, put a number on it. Trillions? I mean, is it like the Bitcoin exit from ETF? That worked out.
Yeah.
Yeah, no, nothing like that. But steady flows in. And I think that this has been happening for several months now as people just get worried and shakier. They say, well, I'm just going to lock in a 4, 5, 6% yield here and sit on it for a while and see what happens.
How about credit risk? How do you feel about taking credit risk here? I know that the spreads are tight, as you folks in fixed income like to say, but still the absolute yields are pretty interesting.
Yeah, I think it's okay to take some credit risk here, but we wouldn't go overweight here. The spreads are just too tight. And if you go down the credit spectrum into high yield, you're seeing some underperformance there at the lower end. And my biggest concern is not so much spreads widening, but the lack of liquidity that you can get when something goes wrong. I think people underestimate the value of liquidity in portfolios in general, and certainly in times when you've had such a good run, they underestimate how important liquidity is.
How about private credit? I mean, talk about liquidity or lack thereof. Private credit has been an asset class that's just exploded in the last 15 years.
Every other page of Barron's this weekend
exactly right.
is the Kathleen Jones Schwab private credit fund.
So what do you do there, Kathy? How do you talk to your clients about that?
Well, I think, again, it's a liquidity issue, right? People are interested in it. I think you have to make sure you can deal with the lack of liquidity and the lack of transparency in terms of pricing. So if you're still interested in it, then fine for a portion of a portfolio, but I wouldn't go all in at this stage of the game just because it's had such a good run and because you do run into those issues as you get further along.
Do we have credit quality issues out there? I haven't seen a big credit blow up. I can't remember how long.
Yeah, the capital markets have been wide open and the private markets have been wide open. So companies that have run into trouble have been able to find financing. And so that's delayed probably some of the issues that are under the surface.
Boy, back in my day, we had some nice blow-ups, Tom, on the credit side. People forgot about that.
They're always entertaining.
Yeah. They're always entertaining. We just haven't seen it. How about, I'm going to throw it out there. It's not Friday. Usually we do municipal bonds for Friday. How about the municipal bond market?
Municipal bonds, if you're in a high tax bracket and high tax state,
boom,
make a lot of sense. I think a tax equivalent yield in New York or maybe California or some other high tax states is pushing 6% plus. That's your nominal yield's 3.5-ish. You're getting close to 7% on a tax equivalent yield. Not bad.
But a fundamental thing here. I mean, we're among friends. Good morning, everyone out on YouTube. Thank you for listening this morning. What a week. Subscribing to YouTube. I'll talk about David Weston in a moment. But Kathy Jones, I mean, the basic idea is there a shift now from Mag 7, Liz Ann Saunders, equity certitude over to the land of Kathy Jones? Is that shift going on right now?
Yeah, I would say it is. We've seen the shakiness in the stock market, particularly in those big names. And I'm treading on territory that's not mine, and I don't know very much, but I do know that those stocks have had a lot of volatility. And I think that people look at the world and say, I have no idea what's coming in the next 10 minutes or tomorrow. And fixed income at these yields looks pretty attractive as a way to safeguard some of the gains you might have made in the stock market.
Kathy Jones, thank you so much. With Charles Schwab here on yield and a six-year center duration, to say the least. Futures up 34. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Ukrainian President Volodymyr Zelenskiy said he is willing to meet again with Donald Trump if the U.S. president invites him, but signaled that another White House encounter would have to be serious for him to make the trip. Friday's clash with Trump and Vice President J.D. Vance left attempts to get the U.S. administration on Kyiv's side in tatters. It also set off a scramble among Europeans to get the two leaders back to the table as they tried to demonstrate broad support for Ukraine at a security summit in London. Meanwhile, Secretary of State Marco Rubio insisting the president is still committed to peace in Ukraine.
The last line in the president's Truth Social post is the one to focus in on, and that is, we'll be ready to re-engage when they're ready to make peace, which is clearly what the president's goal is here. He's trying to get Russia to the table to see if there's a way to bring about an end to this conflict. That's his goal. That's his only goal.
However, Democratic Senator Amy Klobuchar of Minnesota said what she saw was appalling when it happened.
Either it was an ambush setup or they just got so hot-headed, the president and the vice president, that what happened. It's the chaos of this presidency. It's chaos is up, corruption is up, costs are up.
Senator Klobuchar and Secretary Rubio both appeared on ABC's This Week, heard Sundays on Bloomberg. Cruise passengers off the coast of New Zealand had a stomach-churning experience over the weekend. The massive Crown Princess ship hit stormy water and reportedly tilted 14 degrees to its side. Social media video shows food and dishes scattered in the kitchen and water pouring out of the pool onto the deck. Andur won for Best Picture at the 97th Academy Awards last night. Sean Baker won for Best Producer for Andur. He spoke backstage.
For us to be, just in that conversation this year with these other wonderful independents, it means everything.
Best Actor went to Adrian Brody. Mikey Madison won Best Actress. Zoe Saldana won Best Supporting Actress. And Kieran Culkin won for Best Supporting Actor. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
I mean, Michael, I got to go back to the cruise ship thing. When you were in your Detroit Lions Barry Sanders jersey and Speedo, and you jumped in the pool, the boat tipped 14 degrees, right?
That was people running from me more than anything.
I mean, an olive came out of somebody's martini and went off the starboard side here. I've never been, for those of us that have never been on, have you been on a cruise ship?
No. Oh, I've just been on some Disney stuff.
I've never been on a cruise ship. Michael, what do? Eat all day? Is that the basic thing?
That is part of it. And then you do the excursions.
Ooh.
And my wife, bless her heart, Turks and Caicos, she drove a dune buggy.
There you go. See?
I was impressed.
That's good stuff right there. But I saw some of the video from this cruise ship. I mean, this thing was moving. This ship. I mean, unbelievable.
The one that tipped over 14 degrees.
Yeah. I mean, at 14 degrees, I didn't think much of it, but I saw some of the videos like, holy cow.
The first time I saw one was I was at St. Mark's Square in Venice, and just like they complain about, the cruise ships come right
in,
up
and people come
to that historic place.
Yep.
I couldn't believe the height of the ship.
Yeah.
You could even see, like in the misty clouds, the room that Michael Barr had.
Of course,
up on
the suite, the Commodore suite.
That's like
that's what he gets.
The decks go from A to Z on the bottom, and he's at AAA up top.
I was more at Y more than anything else, but okay.
Your cruise ship report there with Michael Barr at 14 degrees. I think 14 degrees is a lot.
I think it is
like
too.
We make jokes about it, but it's like people could get hurt. It's funny. You got to lift to the market, folks. We're going to really dive into the data here. The Sweeney yield under 4% in the trauma of Friday, 4.03% on the 2-year yield. We'll monitor that. 10-year real yield, 1.87. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Will the U.S. CPI exceed 2.4% in March 2025? You can trade your prediction with IBKR Forecast Trader. The yes recently at 60%. You can buy yes or no and earn $1 if you're right. Go to IBKR.com/forecast. Oh, we've got futures advancing this morning. This investors kind of monitor the outlook for tariffs ahead of a key jobs report, too, later this week. We'll start with NASDAQ futures up 0.8%, 176 points. S&P futures up 0.6%, and we have Dow futures up 0.4%. The 2-year yield, 4.02%. That's up 3 basis points. The yield on the 10-year, 4.25%, and that's up 3 basis points. To commodities, we have spot gold, $2,874 an ounce, up about 0.6%. Brent crude up 0.2%, $73 a barrel. WTI crude, $69 a barrel. And the Bloomberg Dollar Spot Index down about 0.3%. We have shares of luxury fashion conglomerate Capri. They're up 7%. Sources say it's moving closer to selling Versace to Prada after agreeing to a price nearly $1.6 billion. And I'm not sure if you were watching the Oscars on Disney's Hulu, but they had a little bit of a technical issue. The streaming service crashed during the show. A lot of people were locked out of it. And since we're talking about the Oscars, Bloomberg's Lucas Shaw saying the Academy has begun the hunt for the next home. Sources are saying a potential partner could be Netflix. But we shall see. ABC
Lucas Shaw,
for like 50 years. We shall see. On-demand news, yes.
Let's find a huge block to devote this to this morning. We can't do it right now because the guest is too important, but Lucas Shaw was on fire yesterday.
He was.
Can't say enough about his research. No, Lisa, thank you so much for that. Yes, the newspapers are coming up. Some OMG, are we going to get Lisa papers? And yeah, she's going to wear a Schiaparelli for that. We hope. Futures up 34. A couple days ago, I said to a couple of the interns, I said, can you just get me Roach out of Yale University? And that was before this weekend 5 times. I had explained to people that I wonder what the conversation is like between Moscow and Beijing right now. Stephen Roach is definitive in the invention of Morgan Stanley economics. Unlike many, he did not take an easy path in so-called retirement. He is committed to Yale University there at the Paul Tsai China Center at the Yale Law School as well. Stephen Roach, thank you so much for joining us for a 4-hour conversation. We're going to squeeze. Steve Roach, is Moscow talking to Beijing? Is Beijing talking to Moscow? What are they talking about?
Well, Tom, since they signed a partnership without limits on February 2nd, 2022, just a few weeks before the war in Ukraine started, they've been talking continually. They continue to reinforce and underscore the deepening of their relationship in political terms, economic terms, and in personal terms, with the sort of the leader-to-leader bromance between Vladimir Putin and Xi Jinping. So I have no idea if they've chatted since the blow-up in the Oval Office on Friday, but I certainly wouldn't be surprised if there hasn't been some further discussion in keeping with this deep friendship.
If there are, say, a list of things, 10 things that China could do, given tariffs and economics and also the politics, I look at a defense document here. This is from defense months and months ago. And the basic idea is Beijing's calculus for invading Taiwan by 2030. Forget about the game and the guessing of it in that. But is Taiwan at risk because of instability somewhere in the vicinity of Poland and Ukraine?
Look, I think that the imminent possibility of a PRC move on Taiwan has been overblown for a long time. China, as you know, Tom, plays the long game with respect to everything, economic, domestic political, as well as cross-straits political. And I think the idea that they're going to shorten that perspective is sort of overblown U.S. paranoia rather than a realistic assessment of the calculus in Beijing.
Stephen, give us the kind of how you're viewing the latest discussions about just global tariffs in general. We got the next couple of days are going to be kind of important for the U.S. and Mexico and Canada. Where are we on this whole tariff situation?
Yeah, it's a fair question. There's no great clarity because the main source of agitation and dynamic is coming from a very unstable, unpredictable U.S. president. It just sort of depends on what he feels like saying on any given day. It looks like this week we'll see intensified tariff pressure on Mexico, Canada, and China. I wrote probably my 25th piece on tariffs late last week, and I pushed the send button, and 10 seconds later, Trump says, well, how about another 10% on China? So I had to, fortunately, I was able to retrieve that and correct it. But it's hard to keep track with sort of a president who acts on the basis of whim rather than analytics, logic, and fact.
So is this, as we think about a world where tariffs seem to be more of an economic policy versus some other administrations, is this an issue for inflation? Is it an issue for economic growth in the United States? Is this something that we really need to be concerned about, do you think?
Yeah, I think it's an issue. I mean, Trump did tariffs aggressively in 2018, 2019. At that point, inflation was pretty much on target, running around 2% for the Fed. The economy was not as tight as it is today. So I think that this is certainly more of an inflationary concern today. And the main reason is that the tariff proposals in 2018 and 2019 were largely bilateral, country-specific, aimed at certainly our largest trading partner, China, but the rest of the world was spared. This time he wants to do tariffs on literally anyone, including the ludicrous reciprocal tariff plan that, he wants to sock everyone with because they don't play the game our way.
So, Stephen Roach, in the old days, you turn to Richard Byrne and you'd say, Dick, can you just give me a number? We're starting to see numbers of reduced GDP. Mark Zandi over at Moody's out this weekend with a 1.2% Q1 GDP as well. Is it fair, Dr. Roach, to simply move from inflation analysis or tariff analysis right over to coming up with a real GDP estimate? Is it easy to do that?
It's never easy to make those connections, Tom, but there clearly are risks to the downside of the U.S. economy, not just coming from tariffs and the Fed policy implications of the cost increases associated with that, but we've got markets in the United States, especially equities and the value of the dollar that have been moving up vertically recently. Price for perfection. The exorbitant privilege of the American dollar is a term that's, I hear so much it makes me nauseous, especially in this current period where there's a lot of exorbitance going on, but the privilege is something you can draw into question. So if markets correct in an asset-dependent economy and, the Fed refuses to conform to market expectations of accommodation, there certainly are growth risks on the downside.
Stephen Roach, too short a visit. Thank you so much. Dr. Roach is with Yale University, the Paul Tsai China Center. We'll try to get on for a longer session here as we can into March. Futures up 30. Paul and I are looking at the bond market to 4 digits on the 2-year yield, 4.0278, bouncing nicely up 4 basis points. Paul, you mentioned the spread market in like something obscure like 3-month, 7-year actually inverted. Yep. I've never looked at that.
No,
I know you do every morning when you wake up.
Of course, yeah. But again, you got to get the 2-year at 4.03%, the 10-year at 4.25%. So still, a steepening yield curve, a little bit. Yep, a little bit less. Hey, gold again up $39, $2,887. We're still in that 3,000 watch. Goldman Sachs has got that $3,100 call out there.
I guess it's a recovering tape.
A little bit, yes. I think you're right, Tom.
Hani here at Bloomberg, keeper of the president's schedule, says we don't have a schedule yet.
We don't have a schedule yet. Well, I don't know if he's still in Palm Beach. I'm not sure where he is. It's all good.
Oh, it just came out. Thank you.
There we go.
We'll peruse that. One of our interns will grab that.
Very good.
That's the way we roll.
Yep.
Good morning on YouTube. What a month on YouTube. Thank you so much. Subscribe to Bloomberg Podcast, building each and every day our new digital experiment around the world. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Matei. We've got futures on the rise. This is investors try and gauge if President Trump will go ahead this week with tariffs on Canada and Mexico. We'll start with NASDAQ futures up 0.7%, 151 points. S&P futures up 0.4%, 29 points. Dow futures up 0.3%, 153 points. The 2-year yield at 4.03%. That's up 3 basis points. The yield on the 10-year 4.25%, and that's up 4 basis points. The Bloomberg Dollar Spot Index down about 0.3%. We have the euro peso up 0.9% at 104.69 against the dollar. Over to Bitcoin, down about 1.5%, but just above 92,000. Excuse me. This week ahead, we have the Labor Department's February employment report, and a lot of retailers reporting this week, including Costco, BJ's, Target, Foot Locker, and The Gap. On the tech side, you have CrowdStrike, HPE, Marvell Technology, and also Broadcom.
More earnings?
Yes.
Wow.
More
Never
coming
stop.
this week. Not today, but this week. There you go. A few companies making news. We'll start with Shell. They're exploring a potential sale of its chemicals assets in Europe and the U.S. And then sources saying Philip Morris exploring a potential sale of its U.S. cigar business. Philip Morris seeking over $1 billion. And then Reuters reporting Honda will produce its next Civic hybrid in Indiana instead of Mexico. That's to avoid those U.S. tariffs. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Lisa coming up with the newspapers. We'll do that here in 10 minutes, 15 minutes as well. Joining us now, this is really important, folks, because I can look at Cameron Crise's work 4 or 5 days ago and say, get Cameron Crise, except that was 4 or 5 days ago. Yep. And the news is moving so quickly that he's writing literally on a two times a day pace. Cameron Crise does a lot of thinking for Mark Cudmore and our markets team. He's Bloomberg's macro strategist, really looking at the bigger picture. Cameron, you capture perfectly in a recent note that with the advent of what Leontief did in 1947, we're taking our dynamics right now back to what we saw off of World War II and all the bouncing around, the dynamics, the volatility. Then, can you believe in the shortfall of first quarter GDP?
Well, as anticipated by the Atlanta Fed, no is the short answer. They projected on Friday after the advanced trade figures for January that the economy would shrink 1.5% this quarter. But if you break it down, it looks like a lot of the deterioration in the trade deficit is because of gold imports, with U.S. Gold operators looking to sort of front run the tariffs, which has no real impact on the economy, and more generally. If it's certainly plausible that not only gold importers, but wholesalers, retailers, consumers are sort of front-running putative tariffs by buying a lot of imported goods. And that does mean that the trade deficit or net exports will subtract from GDP, but there should be a corresponding rise either in consumption or in inventory accumulation that wasn't really evident in the Atlanta Fed numbers. So they're kind of like too bad to believe.
Now, Cameron, folks, works up in Stamford, Connecticut. Sure. Paul, he's on the old RBS floor there.
Yeah, I know.
Which is the size of a football field.
Exactly.
And he's got a little desk with 3 Bloombergs, and the entire rest of the football field is empty.
Yep, and
with
that's
those big windows in front of it. Cameron, what's the first thing you look at in the morning on your Bloombergs to measure this market?
Well, like everyone else, I suppose, I look at what the overnight equity price action is, what the overnight fixed income price action is, what the dollar is doing. What's interesting is that over the last week or so, the U.S. equity futures in particular have showed a pronounced tendency to rally overnight, which hasn't really manifested itself in what actually happens when the opening bell rings. Last week, for example, U.S. equity, the S&P futures rallied about 1.1% in total overnight, but the index dropped something like 2.2% between the opening and closing bells. So just because the overnight price action looks quite happy doesn't necessarily mean that that's what we'll get once the real trading begins at 9:30.
So, Cameron, how do you feel about this U.S. dollar here? It's obviously, kind of since September, had a nice rally, pulled back a couple of percent over the last couple of months. But, boy, the dollar looks strong here. How do you feel about the dollar relative to other currencies?
Yeah, it's a real interesting one, because if the administration goes through and implements these broad-based tariffs, then the dollar should appreciate. The economic theoreticians will tell you that if you implement a trade duty, then the exchange rate should appreciate to essentially offset the domestic cost of that duty. Scott Bessent a couple of months ago cited a pass-through rate of 40%, such that a 10% tariff would lead to a 4% appreciation of the currency. And we've sort of seen that dynamic play out in the dollar versus the Canadian dollar. That being said, if all of this tariff uncertainty engenders a legitimate weakening of the economy, not the sort of distortion that we saw via the Atlanta Fed, that should bring interest rates lower, interest rate expectations lower, and that should undermine the value of the dollar. So I'm kind of scratching my head a little bit. I mean, normally you'd say, hey, something like dollar yen is still very, very expensive and still very, very vulnerable to lower U.S. interest rates. But if you look at, say, the currency futures positioning, yen positioning is at an all-time high. Insofar that, I mean, that's not to say that it will correct today or tomorrow, but the law of mean reversion is one of the most powerful forces in financial markets. And it suggests that the marginal trade will be to sell yen rather than to buy it.
For those of you new here, the law of mean reversion is the Red Sox in May and their September prospects as well. That's how that works. Cameron, thank you. Cameron Crise with us with Bloomberg Macro with a bigger view of the market. Right to it with our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Ukrainian President Volodymyr Zelenskiy said he is willing to meet again with President Donald Trump if he invites him, but signaled that another White House encounter would have to be serious for him to make the trip. It comes after Friday's clash with Trump and Vice President J.D. Vance at the White House. It also set off a scramble among Europeans to get the two leaders back to the table as they tried to demonstrate broad support for Ukraine at a security summit in London. Crews battled wildfires in North and South Carolina amid dry conditions and gusty winds as residents were forced to evacuate in some areas. In South Carolina, Governor Henry McMaster declared a state of emergency Sunday to support the response effort, and a statewide burning ban remained in effect. This woman says it has been a surreal experience.
And then they get them under control, and then it starts up again. It just keeps going. Like, they get them down, the fires, but you see the smoke, and then within hours later, it relights again.
Nora won for Best Picture at the 97th Academy Awards last night. Sean Baker won for Best Producer. Best Actor went to Adrian Brody. Mikey Madison won Best Actress. Zoe Saldana won Best Supporting Actress, delivering a heartfelt speech thanking her family.
I am the first American of Dominican origin to accept an Academy Award, and I know I will not be the last.
Kieran Culkin won for Best Supporting Actor during his acceptance speech. By the way, Culkin said his wife promised they'd have a fourth child if he won an Oscar.
She said, I will give you 4 when you win an Oscar. I held my hand out, she shook it, and I have not brought it up once until just now.
Global news, 24 hours a day, whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. We'll do the Oscars here in a moment with Lisa. Ian Lingen out with a lengthy note. He will not move the goalposts.
No.
He's at a 4% 10-year yield. He wants to move it lower, as a trend has been for lower yield, higher note prices, but he's not moving the goalposts yet.
No. And he's calling out his note. There's some growing concern, I would say, over the last week or two, Tom, about just economic growth in general, suggesting that maybe the Fed may need to act in terms of cutting rates at some point. Yeah. So that's kind of what he's calling out.
Worst job on Wall Street? Vail Hartman. He has to work with Ian Lingen.
Oh, boy.
He's got to keep up with Ian Lingen and write. He's probably got to edit the note. Ian, can we cut it down to 10,000 words?
Yeah, exactly.
Vail Hartman at BMO, our deepest sympathies. From New York City, Bloomberg Surveillance.
Now a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Your Oscar report, the daily front pages, of course, always brought to you by IBKR. Will the U.S. CPI, will it exceed 2.4% this March of 2025? Trade your prediction with IBKR Forecast Trader. The yes was recently at 60%, 60%. Buy yes or buy no and earn $1. If you're right, go to ibkr.com/forecast. Okay, Lisa, Ariana shows up in a Schiaparelli.
Oh, she was
it
so
should
cute.
go right to the Costume Institute at the Met. It just deserves to be in the basement. It was like completely not modern, is how I'd put it.
No, I love. She looked like a little princess, like on the red carpet. Like it's like when you open that jewelry box and the little ballerina pops up and spins around. She looked like that.
Schiaparelli, it wasn't poofy. It wasn't cheap. It was just.
No, it was beautiful. I loved it. Loved it. Loved it.
I'm thrilled that you wore it today to work.
Yes, of course.
What do you got?
All right, I'm gonna kind of pull an audible here. I was going to do the story about the montage and the people that were kind of left out of the ones who, actors who died, because you had Michelle Trachtenberg, Shannon Doherty.
Surveillance audio.
Yes,
Audible.
yes. Surveillance audible. I'm going to go to this Lucas Shaw piece because I just find it so interesting about, Disney being the host of it for like 50 years for the Oscars. But now you see that starting to change because he has this article in Screen Time. You have to check it out about possibly them talking with Netflix, maybe, of being the next partner. Because last year, they were reopening that deal. It was worth more than $100 million a year. But that negotiating window between the two sides, it's open. So now they have these talks going on. So I thought this was really interesting about how Netflix could be it, because then you think about streaming and how streaming is going to a lot of more live events. So if this is going to be like another way for them, if that's what they need.
That's where the world's going. So, I mean, you got to see some of these big ticket items. And again, the next one of the next big things in addition to these, broadcasts like the Oscars is, live sports, the NFL and things like that.
But the thing I noticed last night, Mrs. Keene brought this up, addicted to all this idiocy, like Lisa, is Paul, streaming is completely taking over.
Yes.
I mean, this year they didn't have Oppenheimer and Barbie.
Right.
Period.
Right. I mean, you just look where the programming budgets are going from some of the big companies, like a Walt Disney company. They're all going to their streaming services. What do you see on your network television? You see a lot of, just not a lot of scripted drama. They're just not allocating the budgets, so they're putting all their money in streaming.
Is streaming a movie?
Yeah, sure, absolutely. We can do that.
Okay.
So why not? That's where everybody's going.
What do you got?
Yeah, and it was also talking about how like the box office numbers for all the Best Picture nominees was like 40% lower than last year.
Yeah, I don't know what they're
doing.
doing. That's just the Academy.
Yes. 41 million worldwide.
It's silly.
I haven't even heard of it. So that's going to be on my list. Okay.
Yep.
Let's move on. The gift bags. Okay, that's what I want to talk about because a lot of the nominees who didn't take home the Oscar, they did not go home empty-handed. They were carrying along a $216,000 bag.
Are you serious?
They were gift bags from distinctive assets, mostly experiences that kind of make up the value. So you have like liposuction from Art Lipo for $25,000. Okay, 5 nights at a Sri Lankan wellness retreat for about $8,500. 4 nights at Jawali Maldives and Jawali Being for $23,000.
Wait, they get a coupon to Jollibee?
Is that what it is? I don't know how to pronounce these fancy things.
They get a coupon to Jollibee over in Astoria?
No.
Well, quickly here. Give me one more merch item.
Okay, one more merch item. Oh, did you know a 3-month top-tier Ancestry DNA membership is $25,000?
Really?
Yes.
Wow.
That was in there too.
Just to tell me all my ancestors came from Ireland.
Yes,
Great,
they have all the beauty products and all that kind of stuff.
Most are sober, right?
Yes, exactly.
Lisa, thank you so much. Lisa Mateo there. We're in Schiaparelli this morning with your Oscar summary. We'll do some more newspapers tomorrow. Hugely popular. Right now, Dylan, I can't see Jimi Hendrix in a bright yellow Givenchy tuxedo. No, he was a real deal. Doing Bob Dylan, James Hendrix. Good morning.
Businessman there, drink my wine. Plowman, dig my earth. None will ever
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Abramowitz, Lisa Mateo Abramowitz, Lisa Abramowitz. I'm just rattled because she's wearing chaparral this morning. Lisa Mateo with us in her Oscar garb this morning. We welcome all of you on YouTube, and particularly international. Good morning, good noon, I should say, in Europe in moments. Peter Trubowitz with our conversation of the day. We'll get to that carefully on all witnessed transatlantic this weekend. Bloomberg Surveillance, as always, brought to you by IBKR. Thank you, IBKR. Will the U.S. CPI, will it exceed 2.4% this March of 2025? Trade your prediction with IBKR Forecast Trader. The yes, 60%. Buy yes or no and earn $1 if you're right. Go to ibkr.com/forecast. And we thank Interactive Brokers for their support of what we do. Let's get right to it. From the Interactive Broker Studios of Bloomberg Business Flash, Lisa Mateo.
And we got futures advancing. This is ahead of those long-promised tariffs scheduled to take effect tomorrow. NASDAQ futures up 0.7%, 153 points. S&P futures up 0.4%, 28 points. And at Dow futures up 0.3%, 139 points. The two-year yield 4.03%, up 3 basis points. The yield on the 10-year 4.25%, and that's up 4 basis points. French stocks hit a record. Investors trimming the country's political risk discount over this fresh interest in defense stocks. So the CAC in Paris right now up more than 1.5%. And just to give you an example, aerospace company Airbus up more than 5%. We go to currency. It's a Bloomberg Dollar Spot Index down about 0.3%. We go to the euro up about nearly 1% at 104.71 against the dollar. Bitcoin trimming back its Sunday rally. It was sparked by President Trump's comments on strategic crypto reserve. Right now it's down about 1%, but at just over 93,000. Cryptocurrency exposed stocks, those are rallying. For example, Coinbase up 9%, MicroStrategy up 13%, and Tesla leading the Magnificent Seven stocks before the bell. It's up more than 2%, and that's after it recorded its biggest monthly decline in about 2 years. That is your Bloomberg Business Flash. Paul and Tom.
Thank you so much, Lisa. Greatly appreciate it this morning. Well, first of all, let me give pause. The hardcover's $99.
Okay.
That's the way Peter Trubowitz rolls. He's at the London School of Economics, definitive at LBJ in Texas, and of course with the Phelan's Center at LSE. Peter, you're the first name I asked for. With all that we've seen this morning, where are we in a month? How does Mr. Putin respond to what we witnessed in the last 72 hours?
Tom, it's great to be with you. I can't believe they're charging $99 for that book, but in any event, I think Putin is a pretty happy camper right now, especially after everything that unfolded last week. And of course, in particular, following the fiasco in the Oval Office between Trump and Zelensky. I think what has been underscored here for anybody that didn't really realize it is that Donald Trump doesn't have Kiev's back, and that has thrown everything into, I don't know, like fast motion. I mean, what has happened in Europe, in London over the weekend has just been kind of head spinning as they try to figure out some kind of way to right the ship.
Okay, in your book, Geopolitics and Democracy, Oxford University Press, you have a perfect phrase for this moment that all of our listeners and viewers feel, and that is reaping the whirlwind. Can the traditional processes that Trubowitz has lectured on for decades, the Chatham House has talked about, CFR and all the rest, Peter, can reaping this whirlwind, can those traditional processes work, or do we need something new?
It's a great question, Tom. I mean, I would say right now, the standard kinds of checks and balances are not in place. So the most obvious one, when you think domestically, is Congress serving as a check on the president and so forth. To me, I think one of the most interesting parts of or developments in the Trump administration, in Trump 2.0, is the way that his cabinet positions have been filled. He has essentially structured this in such a way that everything is coming out of the Oval Office and there is no opportunity for any check or blocking coalition to emerge among his cabinet officials. Where are his generals? There's nothing horizontal there. And I will say internationally, I mean, it seems to me with respect to the allies, he's just got them on the run. I mean, he is leveraging America's market and he is leveraging America's power to extract concessions. And what makes it very difficult, I think, from whether it's from, Canada to the UK to France to Germany, is they don't know where this will stop. And so there's no obvious kind of break there. The one place he's certain to get pushback is from Beijing.
So are you surprised, Peter, that there hasn't been any pushback from, say, Congress on some of these policy pronouncements or what happened in the Oval Office last week?
I'm disappointed. I'm not surprised, but I'm personally, when I look at this and think about it in terms of what's good for the United States over the long haul, over the horizon, I'm disappointed by it, but I'm not surprised. I'm not surprised for at least two reasons. One is Donald Trump owns the Republican Party, and they're just people that are too afraid of stepping out of line. And I think that for a lot of people, they think that the system that is the international system, can, basically suffer a fair amount of, I don't know what you want to call it, like damage. So so that he imposes tariffs and the tariff rates overall go up, the world won't come to an end. I mean, it seems to me that even big names on Wall Street like Jamie Dimon have gotten themselves to that point, so that they're prepared to see some kind of slippage from the traditional rules-based order that Republican and Democratic presidents alike agreed to.
Our conversation of the day with Peter Trubowitz, we continue. He's professor at the London School of Economics, barely defines his contribution to civics in America with his building of all the politics of the LBJ school at Texas as well. Paul?
So, Peter, we saw over the weekend UK Prime Minister Keir Starmer talk about forging a coalition of the willing to secure Ukraine. Is that even, talk to us about that. How do you think about that?
Well, it's a good question. I mean, it's possible, but if anything, it's anything but a given, I would say. And that's because any coalition that does emerge is likely to be a coalition of the unwilling, rather than the willing. I mean, the crux of the problem here is that European leaders do not want to put boots on the ground as part of a peacekeeping force within Ukraine without a U.S. security backstop in the form of, aircraft, anti-missile batteries, intelligence data, satellite info. And Trump has basically thus far been unwilling to, at least publicly, commit to such a backstop. And I think, the other news item that's getting no attention today is he's got a meeting with Marco Rubio and Hetzkoff, about what the response is going to be. And it seems like, the choices are between canceling or suspending. That's the positive.
Okay,
outcome.
Peter, I got to interrupt here, and this is totally unfair to you, and not the way surveillance rolls. But everyone's thinking about it, whatever their politics. Should the Secretary of State resign?
So my view, and I've said this and I'm on the record, I believe he won't last very long. So, and that's because it's pretty clear. Anybody that was watching on Friday or watched the Saturday Night Live spoof of it realizes that Marco Rubio is very uncomfortable. He's basically pivoting 180 degrees from things that he said about the war, Putin's war in Ukraine 2 years ago. And so the question is, can he carry the brief and, or not? To me, he seems like he's not a particularly relevant player in the administration.
Right. Years ago, folks, you had to walk around campus. If you wanted to be a girl magnet, you had to walk around with a black and white cover book, Reagan's Legacy in a World Transformed.
Work, sure.
And young Trubowitz, Elliot Cohen's in the book, Paul Kenger, others. Yeah. Okay. Young Trubowitz is in there, the balancer. Ronald Reagan, party politics, and U.S. grand strategy. You're in a classroom right now, and that smart aleck Paul Sweeney's in the back row, half asleep. Yeah. And he raises his hand, Professor, and he says, what's after Trump? Do you see a permanence to this Republican effort of the President of the United States, or do you look at Donald Trump as a one-off?
I think the answer here is that it's possible. Look, the United States is very divided. We all know that. And not everybody agrees with this. If you look at the polling and so forth, the country is divided on so many of these questions. So it's quite possible that 2 years from now, Trump, the Republicans lose the Congress, everything grinds to a halt, and a Democrat comes back in 4 years from now and tries to change things. But imagine this from the standpoint, this is the kind of thing I hear over here. As an American, talking to Europeans and so forth, what kind of credibility? I mean, if this can happen, if it can happen, if it can happen under Donald Trump, can happen at this point, and it happened 4 years ago, it could happen again. And I think these things have a kind of, they're sticky, and it's hard to just turn things back. So I think what is happening is, we're seeing parts of the rules-based order that has been in place more or less for 80 years. It's fraying, it's unraveling, and we're going to head into different territory, it seems to me.
Peter, you're a professor of international relations at the London School of Economics. You're an American in London. How do our European allies, who have been our allies since World War II, how do they perceive what's going on now? How concerned are they that 80 years of, relations and policy and strategy seem to be, kind of at risk here?
Yeah, they're freaked out. I mean, look, they have a war on their doorstep. This is not the first time. Let me just say, too, this is not the first time that an American president has put, if you will, the screws to Europe over security. Richard Nixon tried to shake down America's allies back in the 1970s. Tom, you'll remember this, when he threatened to slash the American troop presence there if they didn't start spending more on defense. But the difference between then and today is there wasn't an active war on Europe's doorstep. So this really has their attention. But the question, Europe the EU does not make a decision on a dime and turn on a dime. So they have trouble they've had trouble always coming up with a coherent foreign policy, a security policy.
I remember the day.
It's not obvious that they're going to get there.
I remember the day de Gaulle wouldn't let American jets fly over France on their way to somewhere to bomb somebody. One final question, Professor Trubowitz. A good friend of the show, Robert Hormats, with all of his public service, wrote a book umpteen years ago, The Price of Liberty, Paying for America's Wars. Hormat's grand theory out of Tufts is simple. If your fiscal house is in order, you can't get it done. Russia's fiscal house is not in order. Europe's fiscal house is not in order. Decidedly, America's fiscal house is not in order. How does that play out?
I think the U.S. has much more running room than the other two that you mentioned. And so, I mean, the implication of what you're saying is that each of these countries has an incentive to retrench. The problem here is Putin, if he sees the United States pulling back in Europe, that's exactly what he wants. He wants to be able to divide Europe from the United States. Did not start with Putin. This was the old Soviet strategy as well. It had been Russian policy for a very long time. So he will double down if he sees that goal in sight, deficit or no deficit, I think.
Thank you so much for the time. Peter Trubowitz at LSE, just definitive with an American political thought, thinking forward, the new effort, I can't say enough about it, 200-some pages, Geopolitics and Democracy from Trubowitz out of Oxford. Thank you so much this morning. Futures up 23. How depressed are you? I'm sort of like...
No, we're good. I mean, futures are higher.
The market's higher, but where does this...
Yeah.
I mean, we got the State of the Union. I mean,
it's interesting. Address to the Joint
Kayleigh will be there,
Congress.
and Joe Matthew
will be there.
Will be there.
So we'll see. There's a lot of balls in the air, but
we get tariffs tomorrow, supposedly.
Yes, exactly. That'll be interesting. And again, it doesn't appear like the president's backing off of that rhetoric at all. Are they negotiating tactics, or are they economic policy?
Michael Barr's got inside information, and that's something to do with there's a waiver on Labatt's. With our news in New York City, Michael Barr.
Tom, Paul, Lisa, thank you very much. Ukrainian President Volodymyr Zelenskiy says he's willing to meet with President Trump again, but only if the president invites him for constructive dialogue to solve real problems. Bloomberg's Lori Calvasina has more on where U.S.-Ukraine relations stand after last Friday's Oval Office clash.
What U.S. officials say is that they want to see an apology. They want to see essentially Zelensky come back and grovel. What we're hearing from Zelensky and from the Ukrainian public and from polls there is that they basically don't want the deal that the U.S. is offering. They want some more security guarantees. They don't want to see a change in leader. The U.S. has suggested that, if Zelensky is unwilling to adopt the posture they want, that there should be a new leader. Even opposition leaders within Ukraine say that they need to be a united front and that Zelensky will be the one at the negotiating table, whether that is in the U.S. or in Europe.
Bloomberg's Lori Calvasina in Washington. Cruise passengers off the coast of New Zealand over the weekend were wondering what was going on. The massive Crown Princess ship hit stormy water and reportedly tilted 14 degrees to its side. Social media video shows food and dishes scattered in the kitchen and water pouring out of the pool onto the deck. This passenger says it happened pretty quickly.
The tables and chairs went flying across the room. A girl went sliding on her chair over towards the pool.
Meanwhile, powerful storms moved east through Texas Sunday, causing issues and injuries for some air travelers. Severe turbulence over central Texas forced 3 airline flights to land in Waco, including United Airlines Flight 5690 from Springfield, Missouri to Houston. That one prompted an ambulance response.
We have 2 minor injuries, 1 head injury, 7 or 8 possible walking wounded.
The audio from Broadcastify, 5 passengers were hospitalized as the flight took off again for Houston. At the Oscars, Andur was crowned Best Picture. Sean Baker won Best Director. Adrian Brody won Best Actor. And Mikey Madison won Best Actress. Global News 24 hours a day. And whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. You go to Paul Sweeney, media correspondent here. And what'd you learn last night? I just learned that is the basic phrase, we got to do something. An independent movie with a $6 million budget. Nothing, folks. It's popped $45 million at the box office.
The Oscars had never been about the movie business. The movie business has never been about the Oscars. By and large, for most years, they're not really connected. You don't see the big, box office movies get considered at the Oscars. It's really never been the case most years. And this year was one of those years. Just there was a disconnect. So it's just Hollywood saying, hey, we can put out the big blockbusters, but we also put out some higher end, maybe more thought-provoking content. And, the Oscars is where we can highlight them. And maybe you want to go after the Oscars, go take a look.
Do you think Conan survived?
Yeah, I don't know. I don't know. It's a tough gig because everybody's criticizing you.
Yeah.
But, I mean, you certainly get a lot of notoriety, get a monster audience, and if that's what you're looking for, then the Oscars can deliver that for you. So, but again, the streaming issue is such a big issue as you raised before, Tom. I mean, everything's going that way.
I just think it's revolutionary.
Yeah,
of course,
sure.
You know, the way we base it as surveillance off is the Michael Barr household.
Yep.
Where
the Bash, they had the party in Eastern Ohio last night.
How was the party, sir?
Oh, the party was fine because I was awakened 4 times as I was trying to sleep.
That's not good.
Michael
Barr's got to get up at 2 a.m.
I was, I'm glad my wife had the party and everything was great and I'm happy, but man,
I put the
once a year, buddy.
I put the pillow over my head and Mrs. Keene exited to the east wing of the house with the dogs. I mean,
all right, so Michael Barr gets in. He badges in at 2:40 a.m. I'm saying he's on the road at 1, Tom.
Oh, it was before that.
Well,
before that, because again, he lives in Eastern Ohio, coal mines.
But on a Monday, he gets a Sikorsky helicopter.
Oh, okay, very good. I didn't know that. Okay.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Well, we got futures on the rise, and this is investors monitor the outlook for tariffs, also ahead of a key jobs report later this week. We go to NASDAQ futures up 0.7%, S&P futures up 0.4%, Dow futures up 0.2%. The 2-year yield 4.03%, up 4 basis points. The yield on the 10-year 4.25%, and that's up 4 basis points. We have spot gold $2,871 an ounce, Brent crude $73 a barrel, WTI crude $70 a barrel. The Bloomberg Dollar Spot Index down about 0.3%. This morning, shares of luxury fashion conglomerate Capri, they're up 7%. This is after sources saying it's moving closer to selling Versace to Prada after agreeing to a price of nearly $1.6 billion. Then we go to shares of Intel up more than 5%. Reuters reporting that its chip manufacturing business could gain some major customers in NVIDIA and Broadcom. And finally, Chipotle Mexican Grill is rising more than 2%. It was upgraded to overweight from equal weight over at Morgan Stanley. That for on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Greatly appreciate it. One of the things going on right now between economics, finance, investment, and international relations, thank you, Peter Trubowitz of London School of Economics, is you have to end up actually doing something with your hard-earned money. David Bahnsen has done that for years with Morgan Stanley, with UBS, now at the Bahnsen Group out on the left coast. His latest book is There's No Free Lunch. Can you develop a tariff-adjusted or tariff-philic portfolio? Are your clients saying, how do we adapt to tariffs for our benefit? Is that feasible?
I don't believe it is, no, because even if one were to come up with something they thought invested in those tariffs that are protecting certain companies, you have retaliatory tariffs that then take you out the other side. Tariffs, that's one thing about them, is they're pretty universally bad. Now, a tariff-phobic or tariff-philic portfolio is hard, because how do you make a portfolio around the talk of tariffs? Mm-hmm. So there's such a huge difference over the last 5 weeks between tariffs and tariff talk. And Tom, the other piece is even 2018, tariffs that do get implemented with 1 million exemptions. There were so many carve-outs and so forth that when all was said and done, it was a grand total of $30 billion, in a $6 trillion government outlay. It was a very small deal. What he's threatening to do this time is much larger, but not a single one of them has happened.
So how do you ignore it? Do you try to plan for it? What do you do? What do you tell your clients?
No, we put a chart up for clients all the time showing a right tail and left tail. I go, here's the two things I don't think are going to happen. The left tail is a full-blown Smoot-Hawley global trade war.
Yep.
Don't think that's going to happen. The right tail is everything gets worked out. He gets a huge Mar-a-Lago accord with China. No tariffs ever get implemented. Everything is full steam ahead, pro-cyclical rally. I said the truth is somewhere in between. Volatility around the threats, some downward pressure. We saw in February, CapEx expectations came way down, reversed after they had been up 3 months in a row since the election. So I think that there is an implication from it. But again, they can't keep having their cake and eating it too. They can't keep saying we're using it as negotiating power and we're going to get revenue. It's one or the other.
My core theory is corporations will adapt. Do you perceive that they will adapt? Is President Trump shifts from rhetoric to implementation of policy?
Yes, that's true universally. I mean, they have no choice. What else are they supposed to do but adapt, right? Now, some can adapt easier than others, and there's other issues they have to adapt to as well. But I agree with you, they adapt. But the main way they go about adapting is with their lobbyist, is by not paying it. And so I really believe that there's so many unknowns here. It's become impossible for markets to price it in. And that's actually a concern of mine because markets showing fear is one of the things that's helped so far.
David Bahnsen's note, Paul, is like Ritholtz. He's got a paragraph.
Love it.
Tariffs matter. Then the next paragraph is tariffs don't matter.
Exactly. And Tom, he does that for a lot of the big issues out there that we're all thinking about, whether it's Mag 7, concentration. How about tax reform? Because tax reform, to me, means real dollars and cents to real people. How do you think about that? How should a market participant think about tax policy?
Well, I think there's no question that taxes do matter. And in my defense, when I say they matter and don't matter, I'm not being the one-armed economist. I'm explaining where it matters and where it doesn't matter.
Okay.
And I think with the tax side, I just believe as a universal principle that if you think stocks are a reflection of corporate profits and lower taxes means more profits, then there's obviously a direct economic connectivity. The issue again here is the uncertainty it means for 2025. Nobody knows what's going to happen. But 2018, we didn't know, or 2017, we didn't know either. They didn't pass that till very late in the year. I had Secretary Mnuchin and Ivanka Trump in my office presenting their plan 3 weeks before it passed in 2017, and they did not know what the final version was going to be all the way till the end of the year. That very same thing could happen this year.
David Bahnsen with us this morning with the Bahnsen Group, and all I can say is within the turmoil to go from Trubowitz to Bahnsen is what this is all about. We welcome you on your commute this morning, particularly on the early West Coast morning on Apple CarPlay, Sirius XM Channel 121, and Android Auto. Good morning, 99.1 FM in Washington. And of course, on YouTube, I just got the February numbers this morning. One of the interns from Chapel Hill handed them to me. We are humbled by the international reach of YouTube. Subscribe to Bloomberg Podcasts.
The internet thing. The internet's it's a real thing, Tom.
Thank you.
Exactly.
I got the memo too.
Exactly. So, David, what do you say here for your clients here? I mean, in 23, great year for equity returns. 24, great year for equity returns. How about here in 25? How are you kind of setting expectations?
Hey, for dividend growth investors, 2022 wasn't that bad of a year either. Yeah, S&P down 18, NASDAQ down 30, dividend growth up 6.5. So I think that 25 is probably going to look more like 22 than 24. It won't be identical to either. But do I think the forward multiple on the S&P goes from 22 to 27 times? No, I don't. Do I think that instead of earnings growth of 12 or 13%, it becomes 16 or 17%? No, I don't. So I think you get more muted returns on the cap-weighted index. We've already seen a big drag from Mag 7, but what a rally so far for defensives. So there's a rotation playing out, at least in the early couple months of the year.
All right, when I see Tim Cook down at Duke in a few weeks, what do I tell him about his dividend policy? Should he really put a 2 or 3% dividend yield out there?
There is no way for them to possibly measure how much they have hurt shareholder returns by not returning cash to shareholders.
See, I'm with you.
Why is a dividend different from a share buyback?
Well, first of all, share buybacks don't actually happen. About 75% of share buybacks in the S&P 500 are replacing shares that were given out in compensation, so they're not a return of payment. But you can't eat a share buyback, and a lot of investors out there need to buy groceries and do real things with cash and de-risk. Every dividend you receive is de-risking the investment. It's real monetization. A share buyback is compounding your risk. Now, when the stock keeps going up, that can be a very good thing, but it isn't the same form of capital return. But in Cook's case, the issue is the incentive to do dumb things with money. Now, for Apple, it doesn't matter with that kind of free cash flow, but what did they spend on the electric vehicle experiment? $8 billion they set on fire. If you're returning dividends to shareholders, you don't go spend $8 billion on a little side project.
Yeah, it's interesting. We'll have to see. So where are we in that dividend return scenario? How is that as a factor or as a policy for investing these days?
I believe it will continue to be one of the most important ones, and that isn't just merely as a factor, so to speak. It's not purely algorithmic or numerical. It's qualitative. I think that management is more aligned with shareholders when the stability of returns, the consistency of earnings stream has to be there for these great dividend growers. There's just time and time again examples.
What's the best dividend growth story in your career?
In my career, as a matter of just plain cash received as return, it's Blackstone. But when you look at the total sum of time, the Procter & Gamble's, Johnson & Johnson, McDonald's, you're talking about companies that have compounded at 100,000% since they went public.
Right. We have to go, but David, I want to tell you that what you just heard, folks, on dividend versus share buyback is the single clearest explanation we've ever heard on this show. For Paul, this is religion. I'm a little less angst about it as Paul, but we both feel strongly that there's more going on here than just cutesy pie finance and share buybacks. That was wonderful. David Bahnsen, thank you so much. We'll feature that on Single Best Idea today, I hope, as we get to that on the podcast as well. Futures up 23, Dow futures up an even 100. The VIX under 20 shows some of the success for all of us of getting through the weekend. The president's on tweeting, getting ready for the state. It's not the State of the Union.
It's an address to the joint houses of Congress.
It's a joint session.
Yeah, Colin's got something for us.
Lisa put me in my place.
She can do that. She can do that.
You know, she just said, Tom, you got it. State of the Union happens next year, I guess. Or
State of the Union. Coverage of the president's address to a joint session of Congress begins tomorrow at 8 p.m. Wall Street time. With Joe and Katie.
Is Katie Lines wearing Schiaparelli? We could see it. Maybe Givenchy. We'll have to see. Futures up 23, the VIX 19.64. On YouTube, subscribe to Bloomberg Podcast. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures pointing to a higher open on this first trading day of March. We'll go to NASDAQ futures up 0.6%, S&P futures up 0.3%, Dow futures up 0.1%. The 2-year yield 4.03%, up 4 basis points. The yield on the 10-year 4.24%, and that's up 3 basis points. We have the Bloomberg Dollar Spot Index down about 0.4%. Over to Bitcoin, down 1% at just over 93,000. The big focus this week on the economic calendar, yes, the Labor Department government's February employment report. But a lot of retailers reporting this week. That includes Costco, BJ's, Target, Foot Locker, and The Gap. And then you have on the tech side, you have CrowdStrike, HPE, and Broadcom, to name a few. Companies making news. We'll start with Shell. They're exploring a potential sale of its chemicals assets in Europe and the U.S. Then BYD looking to raise as much as $5.2 billion in a primary placement. It's offering 118 million shares at a discount of as much as 8.4% to today's closing price. And finally, shares of semiconductor devices company Allegro Microsystems, well, they're up 16%. It's said to be drawing a takeover interest from its larger competitor On Semiconductor. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. David emails in. We're up to 42 listeners.
I know.
David Weston, killing it from up north. Thank you for listening this morning, Mr. Weston. He had a small conversation on Friday. You know, I look at Bloomberg podcasts, which were a big part of it, and it ballooned on Friday.
It did.
It wasn't you.
Nope.
And it wasn't me.
Nope.
Mr. Weston, in conversation with the Secretary of Treasury, popped 3 million views, as they say. That's about as many as Lisa gets for the newspaper.
This Weston guy does a good job. He does a good job.
Huge impact interview nationally as Mr. Bahnsen struggled, to say the least. And I'll tell you what Trubowitz said there about Rubio. I didn't expect to hear that.
No.
Where he's like basically waiting for him to resign. I don't have an opinion on it, but that's what Trubowitz was talking about. Thank you, David Weston, for an important conversation with the Secretary of Treasury on Friday. Really drove forward the national conversation. Joining us now, Jack Devine with us. He's founder of the Arkin Group. And as we had the other day with Mick Malloy, this is people that actually know what they're talking about. Jack Devine, thank you so much. With your work at the Central Intelligence Agency, if I as a hack say, do we have intelligence about what the Kremlin's thinking? Discuss that. Do we know what's going on? Do we know what's going on in Moscow, or do we know what's going on in Beijing?
You always ask me tough questions. I hope so is the first answer. I think the key word in your question is thinking. In other words, I think the intelligence community knows where the armies are positioned and the battlefield strategy and the latest weapons. Thinking has always been the toughest nut to crack. And sometimes we've been extraordinarily good at knowing what's going on and other times not so well. So I'm hopeful that we are keeping up with the tradition, but I'm not betting on it.
Hey, Jack, what did you make, with a little bit of hindsight here, what do you make of what happened in the White House with President Zelensky and President Trump and Vice President Vance last week?
I think a lot of pundits have been covering this and from various angles. I mean, I think if I stood back, I would say, first of all, this is a moment in time. This is not the end game, right? Everyone's focused on the pieces here. And at some point, I'd like to go beyond that. But I think this is a question of people coming to the table not having primed the pump sufficiently to have the right type of discussion. And I think Zelensky was arriving at the table with a list, his wish list, right? And Putin sitting over in Moscow with a wish list. What they're not getting is the negotiations haven't really quite started. That starts when everybody agrees that they're going to be negotiations. So I think they jumped the gun here. And I think there was a lot of grievances and build-up anxiety in the room across a broad spectrum. Obviously, it wasn't the best start, but I think we're going to move quickly beyond that because there's inevitability about where we end up, in my view.
Jack, we've all kind of grown up here in this post-World War II environment where there's a certain set of relationships and policies. Is President Trump fundamentally changing those long-held positions by the East and the West?
What we're looking at in the Trump administration is not a minor shift. I mean, I think every aspect of modern life and relationships is being put to a test, right? And the question is, do we come out of it better at the end? But the one thing I'm absolutely convinced of is that we're really entering this century now. This is really the beginning of the 21st century. I think President Trump is the engine of major changes in relationships and evaluations. And so I think I think everything is on the table, and I think people are saying it. Sometimes we don't listen well, but the administration, everything's on the table. So I think when the deck is reshuffled, however, let me just say that, I think our alliances are our alliances, our enemy are our enemies, but how you handle it and where you go is a process of being worked out. And in the process, when you have that type of change, there's pain.
I look, Jack Devine, at people at risk here, and part of the risk is the cinema of Tom Hanks and the idea of a Berlin Wall or some form of divide and iron curtain, as we know from our youth. And the answer is, are we redeveloping with an isolationist America some form of new iron curtain?
I don't think that's the thrust. I think people are misreading what I think is happening. I think what we're looking at here is a negotiation to bring a war to an end where both parties really need to do that. I've been saying on your show for a couple of years, once you get the stalemate, the cessation of firing, and then you get to some deal. Too many people are thinking that Putin is holding really strong cards. He has nuclear weapons, but the prospect of him using it are very, very remote. The war is not going well for every party. So how is it going to be reshuffled? And I think part of it will mean actually a lessening of friction if the art of the deal is executed as I think it may be.
We're out of time. We got to get Jack Devine on again. Thank you so much. Really, really appreciate it with the Arkin Group. Just love having him on. I got about 8 more questions, but we can't do it.
Yeah, he's seen it all, Tom. So.
We'll have Jack Devine with his work at the CIA on again. Just incredible experience. Futures up 22. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. European leaders spent the weekend scrambling to show support for Ukraine after last Friday's falling out between Presidents Trump and Zelenskiy at the Oval Office. Bloomberg's Tyler Kendall.
Treasury Secretary Scott Bessent, for example, telling CBS News that at this moment, the, quote, sequencing of negotiations is just totally thrown off. The White House had wanted Ukraine to sign this critical minerals deal, and then they would move into brokering that longer peace deal. But at the moment, Scott Bessent is suggesting that that economic cooperation deal could be off the table, depending on how Zelensky responds.
Bloomberg's Tyler Kendall. Meanwhile, the leaders of France, Italy, and the UK were among those who spoke with both Trump and Zelensky over the weekend. Trump is indicating he wants an apology. Zelensky says he's willing to meet Trump again if invited to discuss serious issues. Several people were reportedly wounded after a car drove into a crowd in the German city of Mannheim. It was not immediately clear whether the incident was an intended attack or an accident. It comes less than 3 weeks after a 24-year-old Afghan male drove into a labor union demonstration in Munich and injured almost 30 people. Anora was crowned Best Picture at the 97th Academy Awards on Sunday. Late actor Gene Hackman honored at the Oscars just days after he and his wife were found dead in their New Mexico home. Morgan Freeman spoke during the ceremony.
Our community lost a giant. And I lost a dear friend, Gene Hackman.
The 95-year-old two-time Oscar winner and his wife found dead alongside one of their dogs at their Santa Fe home last week. Their bodies were found at least 9 days after their deaths based on Hackman's pacemaker activity. Both tested negative for carbon monoxide poisoning, but medical toxicologist Dr. Stephanie Whitmer says an autopsy will be needed to rule out carbon monoxide.
The longer that time goes by without carbon monoxide being tested, the less likely it is to show up. It may have diffused out of the body.
Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul Sweeney, the thought there with Jack Devine is so important. I read some Thomas Schelling this weekend, the definitive person in America who thought about negotiation and war. And one of Tom Schelling's arch theories is there has to be a loser. It can be a constructive outcome, but based on what I heard from Jack Devine, are we trying to have an end to a conflict, to a war, without a loser?
Yeah.
And that's what I don't get.
Yeah, I don't get either. I'm not sure how this is going to play out, what role the U.S. is going to play, what role Europe is going to play. Again, Keir Starmer, Prime Minister of the U.K., talking about a coalition of the willing.
We will continue. Futures up 22. Good morning.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone on YouTube across the nation. Good evening to all of you in the Pacific Rim, including Hong Kong, and over to India as well. I'm going to put a particular focus on YouTube in India over the next quarter. After talking with Ray YouTube, who's driving all that I'm doing.
So is Apple. Apple's putting a big focus on India.
Yeah, they are.
So if they're
exactly.
doing it, you should do it too.
Well, that's
Tom.
where
Okay, very good.
You know, I've never had an original idea. That's right. That's where I stole it from. But we say good morning to all of you. An eventful week. The jobs report on Friday. Paul Sweeney, is Alex darkening the door today?
That's what I hear. You know,
Sweeney and Steele, 10 a.m.
Yep.
with the first economic data of the quarter. That will be interesting to say the least. My knowledge of Hong Kong is 3 Prada stores draped across the central district. And if I take the ferry across to the hotel, I can sit in the peninsula and look over at Hong Kong. That's how I say it. It's the way I roll. I've been to China. Enda Curran on tariffs, driving all of our economic coverage, has more than been to China. He knows that beyond Hong Kong, beyond the hills, is Shenzhen. Enda Curran, thank you so much for joining today. If we get tariffs, what does it mean for the Silicon Valley of China?
I think it will mean potentially material impact, Tom, because the difference with this trade war, Trump 2.0, is that tariffs are going on all the goods coming out of China. So we've already had 10% put on all the goods out of China, and now the President Trump's talking about the extra 10% that's supposed to come on tonight. That would be 20%. In the previous Trump administration, they focused mostly on intermediate goods, maybe those sectors or components that you could consider to be in the national security realm. It was $350 worth of goods in the end. Now they're targeting everything. That's the consumer, widgets and gadgets, that's the bits and bobs, it's everything that we buy off the shelves that's made in Shenzhen and everywhere else in China. So it's across the range, and it will pressure margins on China's exporters. The question, of course, is can they absorb those margins, or will they have to pass it on?
And I don't want your opinion, but within all the reporting of Bloomberg News, Paul and I have an understanding that reciprocal tariffs on Canada mean they won't take Jack Daniel's whiskey. What does reciprocal tariffs from China do? Do they say we won't take iPhones?
Well, the merchandise goods trade story between the US and China is fundamentally imbalanced as a starting point, because the US buys so much more from China than China buys from the US. So if you're talking about a game of tariff tennis, I mean, the US has the advantage there to begin with, because China just can't possibly match the US tariff, so to speak. But we did have news overnight where China is signaling through the Chinese press that they can respond in kind, and there's focus now on China targeting agricultural produce and agricultural goods coming out of the US. So yes, on the one hand, we'll have big headlines of US putting tariff on Chinese goods, but China can be selective and can try and cause pain where they can too, and this is a signal they're already sending.
So, and it feels like we're at the point now where these tariffs are going to happen. This isn't a negotiating point anymore. It looks like it's going to happen. Is that the feeling within Washington, D.C.?
Well, I mean, it's certainly literally close to midnight tonight, by all accounts, unless the governments come together and agree some kind of a off-ramp, to use the jargon. Then by all accounts, the president seems serious that these tariffs will go ahead because of the fentanyl and illegal immigration reasons that he has cited. And if so, we're then going to get into significant disruption for businesses. They warn of the disruption, the impact on their operations, on their supply chains, on their sourcing and the like. Yeah. So you'll have that going on, and then you'll have the impact on consumers.
Got to leave it there. Too short a visit. Enda, next time you're in New York, let us know. We'll do 3 segments.
Yeah, absolutely.
With you here in the studio. Enda Curran, with his incredible commitment and experience to the Pacific Rim for Bloomberg News, now ensconced. Do you think he's figured out yet that he likes the Baltimore Orioles and not the Washington Nationals?
I don't know where you go. I mean, you're an Irish dude. You go to school in Dublin. You come over to the D.C. I don't know where you're.
You gotta
I don't know what you do.
This song is really historic. At Record Plant before Woodstock, Stephen Stills and Mr. Hendrix. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr, post-Oster meeting. We'll try to get to Lisa here in the hour to get a good summary of all that we witnessed last night. It was enjoyed at the house.
Yeah, it was good. The stars were out. They were looking good.
I thought Conan was good.
Yeah, I thought he was good too.
I loved at the beginning. A four-time viewer of the Oscars.
He's never been. Can you believe that?
That was great, to say the least. We say thank you so much to you on this first day of March. Paul Sweeney and Alex Steele in 59 minutes with key economic data on this week of jobs. Paul, your thoughts on the cacophony this weekend in a better tape right now?
Yeah, better tape right now. Tom, a little bit of a lift to the market here. Lots of economic data today, as Lisa's been reporting. We have some retailers reporting results this week. I always forget about it. I always feel like earnings is over, and then no. All the retailers bring up the rear and you get a sense of how the consumer's doing out there with his or her pocketbook. So
Mark Zandy, I thought with the tweet of the weekend trying to quantify actually where we are in this Q1 after massive import dynamics because of the tariffs. And of course, all the tariff discussion, as we just had with Andur Curran, magnifies here into the day. You have no idea what the president's going to be saying today about it, into the State of the Union, the joint session of Congress that we see tomorrow. Joe Matthew and Katie. Is it 9 o'clock?
Yeah, I mean, that's way past.
Did you see the Oscars started? Elisa, am I right? It's 7?
At 7, yeah. It started at 7 because that's when I started watching. The 8 o'clock, I was Betty
bye. You know, Lori Calvasina.
Lisa gets in here at like 2 a.m., 3
I don't know. Lori Calvasina wrote in her note this morning, said, thank God the Oscars started at 7. Let's get going from the Interactive Broker Studios, the Bloomberg Business Flash. Lisa Mateo.
You got it. We've got futures advancing ahead of Tariff Tuesday. Right now, NASDAQ futures up 0.7%, 145 points. S&P futures up 0.3%, 22 points. And Dow futures up 0.2%, 107 points. The 2-year yield, 4.02%, up 3 basis points. And the yield on the 10-year, 4.23%. That's up 2 basis points. In Europe, defense automaker stocks helped lift the stock 600 more than 1%. The CAC in Paris, the FTSE in London hit records. We go to currency. The Bloomberg Dollar Spot Index down 0.4%. Euro surging. Expectations for that boost in defense spending right now. It's up about 0.9% at 104.73 against the dollar. There you go. No problem. Bitcoin starting to trim back some of its Sunday rally. It's down about 1% at just over 93,000, but cryptocurrency exposed stocks are rallying, like Coinbase up 9%, MicroStrategy up 13%, and then when we get to Mag 7 stocks, Tesla leading the way before the bell, up more than 2%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Lisa Mateo there with a view of the markets. We'll do more in this hour as well. Joining us now, Lori Calvasina. Paul, you had a coronary this morning. You had a total Bart Simpson meltdown.
I know.
We have to have Calvasina on. Why don't you bring her in after? You mean, it was before I'd had my first tang, and you were going nuts. We have to have Calvasina.
And we got her.
Bring her in.
How good is that? From the lawn at Charlottesville, Virginia, Lori Calvasina, head of U.S. equity strategy at RBC Capital Markets. Lori, we had a little bit of a drawdown, as Tom would say. I kind of called it a sell-off back in the day, but the kids called it a drawdown. 3, 4, 5% over the first part of the year. What did you make of that, and kind of how do you feel about just the market levels right here?
Sure. So thanks for having me on as always. And look, this has been a big point of discussion over the last few weeks. Our view has been that the market's overdue for a 5 to 10% drawdown from peak. And that is, I know that sounds scary, right? But we have done a whole bunch of those since 2022. And that's pretty much what a garden variety pullback has been in the post-2022 era. If you think about sort of at our lows last week, we weren't even quite down 5%. And I was joking, when I was talking to investors last week, the dip that we had felt a whole lot worse than it was. was in terms of the price action. We've started to see anxiety come back. I think tariffs, we're finally starting to see people question the idea of whether or not they're actually a negotiation tactic. That was a big shift last week, and that helped push us to that kind of 4% plus ish drawdown level. But look, our base case has been that we could get to 6,600 on the S&P at the end of the year with at least one of those 5 to 10% drawdowns. We never thought it was going to be an easy path. But I will tell you, Paul, as we've been talking to investors about if that doesn't hold, what's next? We do think the risks of a growth scare, a 14 to 20% drawdown, similar to what we saw in 2010, 2011, 2015, 16, and 2018, when markets were fearful of a recession or a systemic issue that didn't end up quite happening. We sort of got the fear, but we didn't get the event.
Yep.
We think those risks are starting to grow. It's not in my base case, but if we're being intellectually honest with people, we think the risk of something worse than a 10% drawdown is starting to move up a little.
I mean, folks out there, if you ever get an opportunity to get a meeting with Lori Calvasina, take it. Because some really, really good stuff. I'm looking at your chart book here. Lots of good pictures. I like pictures because they help me understand things. But I kind of feel like earnings are as important as they've been for an equity market as they've been for a long time. Because I don't think the Federal Reserve, Lori, is going to do a lot for me this year. How do you feel about earnings?
I'm the same way, Paul. I don't think we're going to get multiple expansion. I do think that the earnings growth outlook makes sense based on the information we have at the moment, but things could change. And I will tell you, as we've gone through and looked at what companies are saying about tariffs in particular, they really didn't start to have detailed discussions until after February 1st, the first deadline on Mexico and Canada that passed. And if you look at what companies have said since then, some of them are starting to bake some tariff impacts into their guidance, but others are saying, even some that have acknowledged it would be a significant hit to them, haven't baked it into the numbers yet either. So we're sitting at 271. That's a healthy growth rate, but we do see some pressures on that starting to emerge. And you've seen the earnings expectations on the bottom-up consensus drift lower a few bucks as this reporting season has gone on.
On our morning commute, Lori Calvasina, RBC Capital Markets on YouTube. Subscribe to Bloomberg Podcast. Dazzled by the international reach there. Thank you so much across the evening Pacific Rim, the afternoon Europe for your attention to Bloomberg Surveillance and to Lori Calvasina. Lori, if I say to you, we're in a bull market, and I say to you, corporations adapt. How will they adapt forward given the political noise?
Oh, yeah, it's an interesting question, Tom, because we haven't really seen a big spate of downward guidance or upward guidance. I don't think companies know where to put the bar right now. And, we sort of looked as we went through one week to the next in reporting season. It started out very optimistic, and that optimism really started to get eclipsed by uncertainty. And I wouldn't say there's pessimism among corporates. The Conference Board CEO survey certainly told us they're still feeling better than they were last fall. We don't really know from that survey how they compare now versus January. But, one thing that came to mind as we were talking to investors last week was going back to that 2015, 2016 industrial recession, where we had resilient consumers, and then we had more pessimism in the corporate sector, especially that industrial and energy part of the economy. And it was just sort of an asynchronous business cycle. We had a bit of a market, pullback, but we didn't really ever come close, to kind of the recession capital R territory. And so as we've watched some of these consumer sentiment surveys slide, and we've seen the contrast with the CEO levels of confidence that have stayed much more resilient, one point of conversation came up, well, maybe we're going to do something like the flip of that, right, where we have some consumer pressure, but the corporate sector stays resilient. I'm not saying that's where we're headed necessarily, but it's one, kind of idea and thought that started to emerge.
Lori, I know when I'm just going through your slide deck and wow, 150 pages. I'm on page 4. Refreshing
I'm sorry. It gets too long.
Francis Donald does not do 150-page decks.
Yeah.
It's like a 6-page special.
I'm plowing through it. You have a year-end 2025 S&P 500 bear case of 5,775. What would get you there? What would push it down?
So we put that out back in November, and we have refreshed the math around that. And there are a couple ways that we could get there. One of them is not really worrisome to me right now. We have done some modeling on our valuation work. If we got 10-year Treasury yields up to 5%, a big move up in inflation, that, when we did the math on that, right, that could have gotten us down to sort of the 5,600-ish type mark, which pulled that bear case down. Our sentiment work, frankly, sentiment's so bad, it's starting to be a good setup on a 12-month forward basis. That would have pulled the number up a little bit. But the other thing, putting the 10-year yield issue aside, because we're taking the message, right, that the Treasury is really focused on keeping 10-year yields lower. I think you have to look at economic growth. And this was one of the things we really focused on in our year ahead outlook was 2% GDP at the time was forecast for this year. That's now up to 2.3. 2 to 3, a very, very healthy environment for the stock market. It typically goes up. You have strong gains, in kind of the low teens, 10%-ish type numbers. But if you slip into a 1 to 2% GDP environment, stocks are usually down more often than they're up. And we have on average about a 3% decline in the market in those kinds of years. So we worry that some of these economic headwinds could potentially start to push GDP expectations down. Not a recession, but something like 1.5% GDP. And I think Francis's number, by the way, is 1.9. It could push you into a troublesome territory. Markets do not like sluggish growth. So that's one way you could easily get there.
What do companies do given this strange thing, sluggish growth? Does M&A pick up among the Russell 2000?
Well, look, I think we're seeing a slow start to M&A this year, and a lot of people are scratching their heads as to why that would happen.
Thank you.
I think if you look at the CEO confidence survey again from the Conference Board, they also showed that employment expectations came in just a little bit. So I think as economic, sort of concerns emerge, everyone's asked about CapEx. We haven't seen any shift in CapEx expectations in the survey data, but you have seen a little bit of ratcheting down on employment expectations, even given what we've had so far. And you've also seen that sluggish start to M&A. We have a good chart. I forget what page it's on in the deck, but it shows you that M&A over time does tend to track CEO confidence. I can't remember where any of the pages are. I'm not going to lie.
Francis Donald has a 6-page deck. Okay, Russell 2000, I'm down 13% in the vicinity of December 15th. Lori, I'm down 14% on Russell 2000, 40% annualized, and I've strapped 2 standard deviations plus all the way down negative 2 standard deviations. Is the Russell 2000 in a bear market?
So the Russell has been under pressure for so long, and we've had nothing but sort of short-term trades in, and then the momentum fizzles out. It's really been jerked around by hedge fund trading and passive investments in the last year and a half, and we've seen hedge funds in particular dialing up their optimism on the small caps when Fed dovishness was picking up, and when Fed hawkishness was coming back, they would dial down. And then we got to the election, and they started getting dialed up on election optimism. I think the problem you've got for small caps right now is that you have had some valuation problems. You've had some frothiness. If you look at the positioning data from CFTC, we are starting to see the valuation data unwind. We've gotten down to average on the long-term PE for the Russell 2000. That often can mark the bottom, but if you have a real economic problem on your hand, you'll go to 11, 13 times, or 15 times right now. We had been up almost close to 19. If you look at positioning, we've got a lot more room to fall. And in the meantime, we've got a lot of economic headwinds that are coming at this space. And you need economic tailwinds to come back, or at least a recession priced in to really want to buy this space. So I think it's, interesting stuff happening here, but it still feels a little early to me.
And the magic of Bloomberg surveillance, folks, while Lori's talking, I'm going to page 106 of her stack. And I'm doing Russell 2000 log linear standard deviation from the depths of 2009. And she beautifully describes we're only down 1 standard deviation on the long-term log chart. We got a ways to go to get down to the angst of 2 standard deviations.
Okay. So, Lori, what do we do here? We're pretty much through the earnings. We're going to get some retailers this week. But what did you learn from this earnings cycle here, and maybe some of the guidance?
So I'll tell you the sector, and maybe it's on my mind because RBC has a conference coming up on this tomorrow. But I still like the financial sector in here. So I'm going to be, really interested to hear what those companies have to say the next couple days. But look, as we did go through reporting season, one thing that became very clear to me was that financials, they've got some tailwinds in terms of the policy backdrop from deregulation. And so the companies have absolutely been talking about that. But they're not really exposed, at least directly, to a lot of the headwinds that might potentially be coming. So, tariff impacts, it impacts the economy, right? So it will end up here as well, but they're not on the front lines of this debate. We've still got some good valuations, especially in the smaller cap financial sector, especially with the banks. I would say the investment banks where the M&A optimism is overdone. Those look pricey. We're not really buying those. But we do think kind of the plain vanilla, sort of regional banks and SMID banks look pretty good in here. And they also don't have dollar pressure. They don't get caught up in where the currency is headed. So we still like that space. And of course, Gerard is still very bullish there.
Lori, very quickly here, a great observation out on YouTube. Thank you for the live chat brilliance. Lori, the Russell 2000 has a lot of stocks that don't make money. How do we address that? The lack of profit down the income statement of so many of those 2000 stocks.
The simple answer, Tom, and nobody likes this answer, but you buy an actively managed small cap fund as opposed to the ETF. And when I talk to active managers in the small cap space, and I've been covering this space since 2007, I know a lot of these folks very, very well. They don't tend to traffic in the unprofitable names. They tend to move up the quality curve. They really do have sort of a nose for finding the good companies. And I think that's really how you combat it, right? Is you just have to have individuals going in and picking the better companies within verticals, within industries, within sectors, because there is a lot of illiquidity. There are a lot of companies with loss makers, and there are goofy, sort of industry exposures, lots of REITs, lots of biotech, lots of unprofitable tech. An active manager can help you navigate around that.
Lori, thank you so much. Greatly appreciate it this morning. What do you got, Paul?
Tom, Lori Calvasina, a resident of the Lawn at the University of Virginia, that is reserved for the most, I think, some of the more accomplished students there. You have to be a senior, that type of thing. There's only 54 single rooms on the Lawn. Each room is furnished with a lofted bed, a ladder above a day bed with a cover, secretary desk with a chair, a hutch containing a refrigerator and freezer, and a microwave, a built-in closet, sink closet, and a rocking chair. How about that?
I gave a speech there one day, and I sat not in the early morning mist, but pretty close, like 90. Everybody's asleep. Calvasina was passed out. But it has to be the most spectacularly gorgeous piece of collegiate real estate in America.
Yep, my good buddy from high school, Robbie Stewart, he had a room on the Lawn there at his senior UVA. It's really, really a special place. And if you get a room on the Lawn, that means you're accomplishing something.
Closest I got to the Lawn was at the Rochester Institute of Technology, where there's winter and the 4th of July. The closest was to walk across the quarter mile where it was 22 below zero. That was as close as we got to the romance of the Lawn. Futures advance. Lori Calvasina driving the market higher with our news in New York City.
Thank you very much, Tom, Paul, and Lisa. Most of Europe rallying around Ukraine following President Trump's explosive Oval Office meeting with Ukrainian President Zelenskiy on Friday. A large summit was held in London on Sunday. Ukraine's president was there. Today, European Council President Antonio Costa said he's convening a special session this week to approve concrete decisions aimed at increasing European defense capabilities.
We welcome the efforts from President Trump to push Russia for a negotiation. And we are willing to participate in all the negotiation.
European Council President Costa says no one wants peace more than Ukraine. Police in Germany say one person was killed and others injured when a car rammed into a crowd today in western Germany. A suspect is in custody. They asked the public to stay away from downtown Mannheim and keep inside their homes. Israeli police say a man in his 60s was killed and 4 other people were wounded in a stabbing attack today in the northern Israeli city of Haifa. Police say they're treating the stabbing, which took place in a central transit hub, as a militant attack. They say a security guard and civilian killed the attacker. Police say the assailant was an Arab citizen of Israel who had recently returned to Israel after some time abroad. There's a wildfire emergency in the Carolinas. Firefighters battling at least 175 wildfires across South and North Carolina, prompting evacuation orders in both states. The area surrounding Beach Church and Avalon were hit hard. This resident witnessed the devastation.
Pretty much everything that they couldn't get out their houses is gone. And then it's just sad.
Emergency leaders are urging everyone to stay alert as windy conditions are set to strengthen. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
You don't want to make light about the fires. They sound really serious down there, but there's fire this weekend. To bring it over to sports is Duke UNC.
Mm-hmm.
I mean, is it different this time around?
Well, it's always a good, nice, obviously it's one of the greatest rivals in college sports. North Carolina is not particularly good this year, so they're weaker than they typically are. Duke is as strong as they've ever been. This is a team that
ever. You're willing to say ever?
Again,
ever
I was there in 1991. I graduated when they won the first national championship. This team is awesome. It's the best defensive team I've ever seen. So we'll see. But it's Duke, North Carolina. It's at Carolina, and we'll be paying attention.
And not this weekend, but the weekend following is where the
ACC, all the conference tournaments, and then you get into the big dance, which I know is when you pay attention, Tom. When you fill out your bracket, and he does it, Lisa. He does it for the all these big muckety mucks on Wall Street. They fill out the bracket for the Bloomberg Terminal. BRKT Go.
Again?
Sure, we're doing that.
Good. You lose every year.
Yep.
What about St. John's? I mean, this is exciting.
How good a story! Again, the Garden packed every time they play. And it's just
exciting.
Awesome. It's amazing. I've never seen it. Well, I've seen it back in the 80s, back when they were.
And do you say, as somebody into this, like Patino, like we knew he'd do it, boom, done?
We knew he'd do it, but boy, I don't think we knew he'd do it this quickly and to this degree.
Very cool.
Yeah, just amazing.
We'll do more on that. I got to pay attention to that. I am deficient in that. Futures up 27. Good morning, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Will the U.S. CPI exceed 2.4% in March 2025? You can trade your prediction with IBKR Forecast Trader. The yes recently at 60%. Buy yes or no and earn $1 if you're right. Go to IBKR.com/forecast. Well, we've got futures advancing. This is investors monitor the outlook for tariffs ahead of a key jobs report later this week as well. We'll start with NASDAQ futures up 0.7%, 157 points. S&P futures up 0.4%, 26 points. Dow futures up 0.3%, 137 points. The two-year yield 4.03%, up 4 basis points. The yield on the 10-year 4.25%, and that's up 4 basis points. The Bloomberg Dollar Spot Index down about 0.4%. We're tracking shares of Southwest Airlines. They're down 2%. That's after a downgrade from JP Morgan to underweight from neutral. And then a few companies making news. Reuters reporting Honda producing its next Civic Hybrid in Indiana instead of Mexico to avoid those tariffs. And speaking of cars, if you're in the market for a new one, Bloomberg reporting that impending tariffs on Canada and Mexico could drive up U.S. car prices by as much as $12,000. What? Yeah, that's a lot. For on-demand news, 24 hours a day. Subscribe to Bloomberg News Now wherever you get your podcast. That is a question for Matt Miller.
How about my Vespa? I'm still good with the Vespa, though, right?
You didn't take it out this weekend.
I did not take it out, but it will be coming out very soon.
Repeat that again. $12,000. What?
It can increase the price of a car $12,000.
Yeah.
Granted, folks, Tom Keene does not own a car other than the surveillance.
No, it's true. The Bentley's leased. But, my basic take, knowing a fair amount about London and Windsor, Ontario, and the incredible linkage to Detroit, is if we get what we get tomorrow and the Canadians respond, like, is it like 3 hours or 6 hours until there's job reductions in both Canada and the U.S.?
I don't know how this is going to work.
I'm not qualified to comment on that, but that's where my puny brain's going.
Yep. Labatt's, cores, I mean, this could get ugly quick.
Or spark plugs. Wait, they don't use spark plugs anymore. Bill Smead doesn't own any auto stocks that they use spark plugs anymore. We're thrilled that Bill Smead could join us with Smead Capital this morning on value management. Bill, just as a general statement, how's value doing?
Oh, great question, Tom. I would say value's been doing better lately, but there are numerous pockets of value that are in the crosshairs of the body politic, and those groups are not doing well. And we own a couple of those groups.
I mean, you're used to being like 95th percentile, like better than anybody in the moon. And it's been not a struggle, but do you say it's been a struggle because of Mag 7, or what's the mix that's causing angst within value right now?
Well, the history of our strategy is we've rolled a dud about every fourth year because we practice low turnover. And if you practice low turnover and you're looking to compound for a long time by owning businesses, sometimes you got to sit through some very difficult circumstances. So we're very positive about the energy business, full well knowing that the swings in the energy business, even in a good era for the energy businesses, are hard to stomach. And this one's hard to stomach because we've got great free cash flow. If you're a private business owner of these companies, you'd be really happy with them because of what they're throwing off to you in free cash flow and profits. But in the public stock market, they're afraid that the President of the United States is going to ruin the pricing.
Tom, do you know that Bill Smead started his career in 1980 at one of the all-time great firms ever, Drexel, Burnham, Lambert? Remember those days when those guys were swinging it around? Unbelievable. Hey, Bill, you know, I'm kind of the guest that Tom and I talked to here. I'm hearing a lot more angst in the marketplace. People are a little concerned here. And I'm not sure why. Maybe it's some of the policies coming out of Washington, D.C., but it feels like people are really on edge here. Do you sense that when you talk to your clients?
Well, our clients are professionals almost exclusively, institutions and registered investment advisors, et cetera. And I think it goes back to a piece I wrote about the week after the election. And that is that the response to Reagan getting elected was very similar to the response to Ronald Reagan getting elected. And then Reagan and Paul Volcker did what they needed to do to kill inflation. And we had a bear market of 22% for 21 months once the initial euphoria went off. And this time, people over-owned common stocks. At that time, they under-owned common stocks. At that time, you could get 15% interest, and now you can get 4% interest. So the support system on a relative valuation basis that existed there. And by the way, it was a great time to buy stocks those first 2 years of the Reagan administration, because if you did, you got wealthy over the last 40 years.
Well, let's come back. Bill Smead with the Smead Capital. Stay with us, Bill Smead. Right now, futures up 20. They get back a little bit into the opening. The VIX under 20, as Paul mentioned, 19.42. Here's Lisa Mateo.
Yeah, and let's see how things kick off. This is the first trading week of March. We start with the S&P 500 up 0.2%, 17 points at 5,972. The Dow up 0.1%, 87 points at 43,929. And then we go over to the NASDAQ right now, just kicking it up 0.4%, 73 points at 18,918. We go to the 2-year yield, 4.02%. That's up 4 basis points. And the yield on the 10-year, 4.24%. That's up 3 basis points. We have the Bloomberg Dollar Spot Index down about 0.5%. And as far as the Mag 7 leading the way this morning, that would be Tesla up nearly 2%. That is your Bloomberg opening bell report. Paul and Tom.
Lisa, thanks so much. Bill Smead with us. Bill, you were in real estate, and particularly in the high-class Simon Property Group, SPG. And it was down once, moonshot higher. It was down in COVID, moonshot higher. up 31% the last 12 months. It's enjoying a 4.5% European-like dividend. But can it just, do you see the framework at Simon Property Group to finally advance and move on from two massive traumas as it has? What's the future of a recovered value stock like SPG?
Well, we actually own two mall REITs. We own it and a smaller one, Macerich. What happened, like Buffett and Munger always say, the key to life is weak competition. And shopping in downtown major cities died with a combination of the George Floyd riots and COVID. So they thought shopping would die. We now know that about 60% of purchases are made in store. And so there's very little competition. Where are you going to go? You're going to go to the most attractive suburban malls, and you're going to go to the premium outlets, which is a fantastic brand that Simon owns. So the stock's been really strong. I wouldn't chase it here, but collecting that nice dividend, basically getting the treasury yield, is very attractive. And again, that was as hated a sector 4 years ago, 5 years ago, as I've ever seen. And now the hated sector is energy, it's as hated as it's ever seen.
Exactly. Well, how about the home builder sector there, Bill? I mean, people tell me we have a housing shortage in this country. I think the Federal Reserve wants to push interest rates lower. How do you think about the home builders?
Well, it's such a good question. First of all, the negative at the moment is their unskilled labor. A lot of it is undocumented. So that's freaking people out.
Yep.
So it could cause them to have to pay more to the day laborers. But the mortgage rate just moved down 75 basis, or should, because the 10-year Treasury just moved down 75 basis points. And that means that we could be looking at a 6 or 6.25. So these companies, Horton and Lennar, are huge powerhouses, and tribulation in their industry adds to their moat. They will have the best time of the difficulty, and they will come out with more and more market share.
Right.
These are fortress balance sheet companies that no longer primarily develop land. They have got economies of scale working to their favor. If you're Whirlpool, you sell them your refrigerators, and if you're land developers, you go to them. Within a year or two, they will build 1 out of every 3 homes built in the United States. There are 180 million people under the age of 40, and last year the first-time home buyer average age was 38 years old. So there's a ramp there, but right now we just got to sit around and get dirt kicked in our face for a while as we take advantage of that.
Just fabulous. Don't be a stranger. Bill Smead with his Smead.
That's value investing right there,
Capital
Tom.
Management.
Getting dirt
It's
kicked
like
in
a
your
throwback.
face until you're right.
It's like talking to Phil Carrera, John Templeton from years ago. Mr. Smead on value.
Fantastic.
Incredible track record, damaged in the past 12 months from energy, but you heard him reaffirm energy there. Dow up 136 points. NASDAQ up 0.8%. VIX with a vengeance comes in. Is there no press conferences today or anything at the White House?
I don't think so. No.
It's just
Not that
like
I know of.
we have a statement at 1 o'clock, I think, an investment.
Maybe some executive orders. I think they do that around 4 o'clock.
Something like that.
It's always fun.
The joint session of Congress tomorrow. Joe Matthew, Katie Lyons leading our coverage. From New York City, stay with us on YouTube, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have stocks, well, just trying to rebound after a February slide. Right now, the S&P 500 up about 0.1%. The Dow up 0.3%. The NASDAQ is little changed. We go to the 2-year yield, 4.02%, up 3 basis points. The yield on the 10-year, 4.24%. That's up 3 basis points. In Europe, defense, automaker stocks helping lift the stock 600 more than 1%. Pack in Paris, FTSE in London hit records. Few companies making news this morning. We'll start with Kroger. It's replaced its CEO Rodney McMullen after an investigation into his personal conduct. So you have lead director Ron Sargent. It's going to serve as interim until the company finds a permanent replacement. And Chinese fast food company, it's Mishu. Its ice cream and bubble tea chains have more than 45,000 locations. I did not know this. It raised more than $400 million in an IPO in Hong Kong. Its shares soared 43%. And finally, look out, Pizza Hut, Domino's Pizza. They say they're going to begin selling stuffed crust pizza in its 7,000 stores this week. It's like it. Its shares are up more than 1.5%. That is your Bloomberg Business Flash.
Do you do that, Lisa?
Stuffed
You would,
crust.
if I paid you, would you eat a stuffed crust pizza?
Well, if you pay me, sure. Yeah.
Okay. All right.
But it's a big thing for Domino's to do it because
right.
Pizza Hut's been doing it, and now
There you
Domino's
go.
is saying okay.
Competitive market, though.
Yes, it is.
We had a pizza discussion, folks, on Friday that missed it. I craved it all weekend. I never got there. I have to do that today. Green on the screen right now. It's really an extraordinary time. This is an important conversation. Monique Pollard is with Citigroup. She's got some big fancy title having to do with European retail, internet, and brands. But what she does have is prodigious academics leading over to what will Europe do. With Citigroup out of LSE in Cambridge, we're thrilled she could join us this morning. Monique, is the European recovery finally here? Finally the banks move? Finally Europe does better? Does it have legs?
Well, yeah, well, thank you. Thank you for having me this morning. I'm delighted to speak. Well, definitely we're seeing, signs of interest in Europe. It's been a while coming, so it's very exciting. When I think across my space that spans general retail, food retail, sporting goods, and some of the internet names, we're starting to see more positive momentum across some of those names. Now, in the food delivery space, for instance, last week we saw a bid for one of the major European players, Just Eat Takeaway, and the shares moved materially on that. And so this idea that you could see consolidation in Europe is also coming to play, particularly because the valuation multiples between some stocks in Europe and the US are at really big discrepancies, and that leaves space for M&A, and that potential for consolidation definitely in that space is leading to that sort of re-rating of some of the shares.
Are managements more, to be polite, Anglo-American? Are managements and the board relationship in continental Europe, are they beginning to act more like an older London or a present America?
That's an interesting question. I think we're definitely seeing signs across some of the continental European players of them taking some actions that shareholders might like, or, as you described, maybe Anglo-American steps. So, I cover a food retail company called Carrefour. They have implemented a strategic review as of their results a couple of weeks ago. So very much in line with what people want to see, kind of rationality. We're starting to see, some cost-saving programs amongst some of the sporting goods retailers that have faced some issues. And so, I think we're starting to see some rational signs that the markets like from some of the European players.
Monique, what are you hearing from your retail companies that you follow across Europe? How's the consumer? Are they buying the Adidas sneakers? Are they buying stuff in stores at Marks and Spencer? What are you hearing about the European consumer?
Yeah, well, I think that I would really break it into two buckets. You've got the kind of UK consumer and what's facing the UK consumer, and then you have the more continental European consumer. So you mentioned Adidas. What we saw last year from the sporting goods retailers was actually really consistent good demand in Europe for sporting goods products, particularly sporting goods products that were very hot. So, you know, whether it was the Adidas Sambas or the Gazelles, you know, that full terrace range was doing very well in Europe. And you saw, you know, quite consistent performance throughout the year from Europe, really. Where there are some concerns, I'd say, is very much around the UK consumer. You know, there's concern that with the UK budget that we got in October, there are pressures.
Is it traditional securities analysis now? Or within this whole Citigroup platform and what you're doing within consumer, is there a basic idea that the cacophony of political economics, Ukraine, the meeting in London this weekend, that you can't do business as usual?
I think there's a feeling that you have to be overlaying the geopolitics for sure. So, you know, if I just think about our team over the past couple of weeks, we've been writing reports, one looking at, you know, where all our retail companies' previous Russia exposure, how much Russia was of their sales and profitability, and so what that could mean going forward if those markets started to open back up for Europe.
Yeah.
We've also looked at China tariffs into the US for those that export to the US. So you have to be overlaying the geopolitics with the fundamental analysis for sure.
Monique, thank you so much. Monique Pollard, Citigroup London with us. We'll get her in the studios here next time she's in New York. I mean, I have no idea what to make of Prada Versace. I know zero of both.
Great movie.
It's just,
I mean, the Gucci movie is a great movie. But I learned about, all I know about luxury is I learned from the Gucci movie. But again,
and the
it's
devil wears Prada.
Yeah, exactly. Yeah. But I mean, the valuations are absolutely still there. And what's interesting about when you talk about luxury, you got to talk about the Chinese consumer who has not generally been traveling to New York and London and Paris. They've been staying closer to home, spending money there.
Yeah,
but it's all about China.
We'll have to see. Well, Dow up 100 points with our news in New York City. Well-dressed, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Volodymyr Zelenskiy said he is willing to meet again with President Donald Trump if he invites him. But the president of Ukraine signaled that another White House encounter would have to be serious for him to make the trip. A clash at the White House Friday set off a scramble among Europeans to get the two leaders back at the table as they tried to demonstrate broad support for Ukraine at a security summit in London. We get more with Bloomberg News senior writer Stephanie Baker.
They did come together yesterday to form this coalition of the willing, a sort of security guarantee force for Ukraine for any deal that might be negotiated. But in reality, that is premature. They need a deal first to enforce, and that still is far off.
Bloomberg's Stephanie Baker, who is also the author of the book Punishing Putin. Despite his defiant tone, Zelensky said that his country was ready to accept a natural resources deal with the U.S. The accord was left unsigned on Friday. A car driven into a crowd of people in Germany has left at least one person dead and several others injured. No word yet on the motive or who was responsible. This comes with tensions already high in Germany, just a few weeks after a similar attack in Munich when an Afghan asylum seeker driving a car into people injured dozens and killed a mother and her 2-year-old daughter. Andur was crowned Best Picture at the 97th Academy Awards on Sunday. It was directed by Sean Baker, who also won for Best Director. Mikey Madison won Best Actress for Andur. Adrian Brody won Best Actor for his performance in The Brutalist.
I pray for a healthier and a happier and a more inclusive world. And I believe if the past can teach us anything, it's a reminder to not let hate go unchecked.
Zoe Saldana won Best Supporting Actress. Kieran Culkin won Best Supporting Actor. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Let's do this for 30 seconds. Lisa Mateo, are the kids at your house interested in the Oscars?
Not really, no, because I was asking them if they were all going to watch it, and my kids were just like, well, no, we don't watch any of those
20 years ago, they had parties, they dressed up. Mm-hmm. You know, in high school, and it's gone.
Well, my daughter is all into it. She went to some hotel has a cinema there, and they had a big party, and it was a watch party. But she's into the arts and that kind of thing, into that. So, but if you're not, for the general public,
I think it's gone
because the movies. I mean, nobody has seen any.
Yeah.
I saw the conclave, but that's it.
And that goes to the streaming rights of it too. Like, is it worth it? Are people going to really continue to watch it?
We'll get the ratings out. I guess we get them out later this morning, and then or even tomorrow.
Yeah, we'll see what.
We'll get them out. We'll have to see. More important than the ratings, ISM here in 11 minutes. Make that 10 minutes. Key economic data.
Alex Steele
to
will break
begin
that down.
your month of March.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. On a Monday, Tom Keene and Paul Sweeney, Bloomberg Surveillance on YouTube. Subscribe to Bloomberg Podcasts out on YouTube.
Yep.
Very important today at 6:30 p.m. The Ottawa Senators play the Washington Capitals.
Oh, boy.
In Washington.
Okay, I think I know something there.
We go to Washington right now. Michael McKee with us, and we speak
What's
to
he
him.
doing down there?
He's down there. Yeah, he's rolling. He's
Okay.
doing the Washington thing. Good morning, Michael McKee. How are you, sir?
Good morning. Unfortunately, Tom, I do not have tickets to tomorrow night's game. Wish I did.
Okay. Well, we'll have to see on that. First in the Metropolitan Division for Mr. Ovechkin and team. Michael McKee, I'm supposed to go to the jobs report. How will our lives be different Wednesday morning if the president does what he says he's going to do?
That's a very good question. I suspect they won't be very much different, although there will be different kinds of market reactions. But even if he announces tariffs tomorrow, it's going to take a little while to work through the numbers and try to figure out what they mean and what they would do to the economy, and therefore then extrapolate out what that means to the Fed. So at this point, I don't think Wednesday morning will be too much more different, although there may be some heart clutching by people if they get nervous about what might happen.
Michael, we got some economic data today, ISM data showing the manufacturing. How important? I mean, manufacturing, I know it's not the services, we're a service economy. How do you look at the manufacturing data in this country these days?
Well, it's kind of important now because, of course, there's this big demand to reshore, bring back more manufacturing to this country. We have to see where we are. We crossed 50, the expansion point, last month for the first time in 2 years. So things have picked up a little, but we also saw this big increase in imports of manufacturing equipment, things that get used in the production of other things last month. So does that mean that manufacturing is ramping up, or was it just an effort to get ahead of tariffs? We'll take a look at new orders when they come out at the top of the hour, and we'll also see what people think of inventories.
Right. How do you respond, Mike McKee, to Dr. Zandy of Moody's? We all respect Mark Zandy's work, and he frames out the makeup of a sub 2% Q1 GDP. Is it a one-off, or within your reading, do we need to begin to model out 2 quarters or a year of sub 2% GDP?
I don't think we can actually say, Tom, but the sub 0% this year or this quarter would come from the fact that we had this huge increase in imports during the last month, which mechanically subtracts from GDP. But those have to go somewhere. They haven't shown up in inventories yet, although wholesale inventories went up a lot last month. So one presumes that they show up in the coming months, and that would even things out. That would take away some of the downdraft from the imports. And so it isn't at all clear that we're going to see negative growth. The way the economy has been going, consumer spending has slipped a little bit, but it's still relatively strong. So it's hard to make the case that we're going to see contraction anytime soon.
Quickly here, does Jerome Powell care about ISM manufacturing, ISM prices paid, ISM new orders, ISM employment?
I suspect he cares most about ISM prices paid. The Fed is on inflation watch. They're much more concerned with that than they are with the labor market right now.
Okay, Michael McKee, thanks so much. He'll be there. McKee sits 10 rows up, behind the benches to the left.
Nice.
Because then he's right over Ovechkin's shoulder when they triangle and set that up. He does it. McKee's huge at that.
Yeah, I know.
Say the least. We say thank you so much for listening here on a Monday. Really interesting weekend, to say the least. Thanks to all of our team for grinding through the weekend. Busy week ahead. We're playing Jimi Hendrix. He played the Beatles. Good morning.
She's a big teaser. She let me have the way there. She's a big teaser. She let